Will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. This hearing is entitled "The End of Affordable Housing?" A review of the Trump administration's plans to change housing finance in America. Before I recognize my staff members, today is Mr. McHenry's birthday. If anyone wishes to sing happy birthday, please save it until later. Thank you.
We all thank you for that, Madam Chair.
Happy birthday. I now recognize myself for 4 minutes to give an opening statement. Good morning. Today we're here to discuss the impact of the Trump administration's housing finance reform plans. We are joined by Treasury Secretary Steve Mnuchin, HUD Secretary Ben Carson, and Federal Housing Finance Agency Director Mark Calabria. Welcome. Let me say up front that the Trump administration's housing finance reform plan would be a disastrous for our housing systems. The Trump administration is threatening to end the conservatorship of the government-sponsored enterprise, that is the GSEs, without congressional action to provide an explicit government guarantee. If implemented in this way, it is likely it would create turmoil in the housing market, prevent many Americans from obtaining 30-year fixed-rate mortgages, and block families across the country from attaining the American dream of home ownership. With this reckless plan for administrative action on the table, the Trump administration also recommends that Congress make several harmful legislative reforms. For example, the Trump plan would abolish the affordable housing goals, which help to support affordable home ownership and rental housing, and replace them with a mortgage fee that Trump officials have not bothered to spell out the details for. The plan would also fundamentally undermine the Federal Housing Administration's ability to create affordable home ownership opportunities. The Trump administration has proven again and again that it is not to be trusted. It has consistently pushed for harmful housing policies and for slashing and eliminating key housing funding for those most in need. This is an administration that has proposed tripling rents on our lowest income households and slashing HUD's budget by 18%. This is an administration that has eliminated protections for LGBTQ individuals, blocked Dreamers from FHA loans, and proposed to make it nearly impossible for victims of housing discrimination to obtain justice. This is an administration that reportedly wants to raise homeless camps and round up persons experiencing homelessness and force them to live in decrepit federal buildings. By contrast, Democrats on this committee have put forth measures to improve the affordability and availability of housing. For example, we have bills to end the homelessness crisis, make FHA mortgages more affordable, and protect dreamers, LGBTQ individuals, families, and children with mixed immigration statuses, and foster youth. When it comes to the housing finance system, I have long maintained that any housing finance reform proposal should adhere to certain key principles. These principles include maintaining access to the 30-year fixed-rate mortgage, ensuring sufficient private capital is in place to protect taxpayers, providing stability and liquidity so that we withstand any future financial crisis, ensuring a smooth transition to a new finance system, requiring transparency and standardization in a way that ensures a level playing field for all financial institutions, especially credit unions and community banks, maintaining access for all qualified borrowers that can sustain home ownership and serving homeowners of the future, and ensuring access to affordable rental housing. It is clear that the Trump administration proposal does not live up to these principles. Today, this committee will examine why the officials who are our witnesses today are supporting such a harmful plan. I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes for an opening statement.
Well, thank you, Madam Chair, and I want to thank the distinguished panel for being here today. Let me begin by saying this. This is a powerful opportunity for bipartisan cooperation. We have a willing administration who is engaged in a productive dialogue on housing finance reform for the long term. Divided government is not ideal for many things, but it is an ideal moment for difficult policy that divides both parties. Housing finance reform divides both parties. There is not a partisan-only coalition that can produce fundamental housing finance reform. Democrats have tried it and failed. Republicans likewise have tried it and failed. In order to have a lasting change to our housing finance system, to put it on a sustainable path for our taxpayers, for our communities, it is important that we legislate in a bipartisan way, and this is an ideal moment to do it. I'm encouraged that Secretary Mnuchin and Secretary Carson have proposed a long-term solution. It's a positive first step on a multi-year path toward building a housing finance system that makes the goal of affordable home ownership more achievable. And while by no means perfect, it sketches a path toward forward and away from the status quo that puts taxpayers at risk and prevents competition within the market. Inaction puts taxpayers at risk. Let me say that again. Inaction, legislative inaction, regulatory inaction puts taxpayers at risk. In January, I reached out to Chairwoman Waters on ideas for committee hearings that I thought could be bipartisan. This was one of them. I offered that back in January, and 11 months later, we are here today. But 11 years ago, we, in the federal government, placed in conservatorship and nationalized, after their collapse, Fannie Mae and Freddie Mac with over $200 billion in taxpayer bailouts. We don't want to relive that. And this administration cannot do it alone and put us on a satisfactory path. Today, Fannie Mae and Freddie Mac remain in conservatorship, unreformed and without competition. Our current economy is strong. This is the time to do housing finance reform because of the economic conditions as well. But with an inevitable downturn at some point in time, and without congressional action and reform of the GSEs, a bailout of these institutions is more likely than not. In fact, until Director Calabria took over, the GSEs had a capital ratio of 1,000 to 1, meaning that even a small dip in the market would guarantee failure. Housing finance is too important to be put at that type of risk. Our housing market has been trending upward for at least the last 8 years, so we may be reaching the top of the housing cycle. We have serious systemic risk at the GSEs and the Federal Housing Administration. It's important that we legislate for the long term. We know it's not easy, but it is necessary. We can't kick the can down the road. I want to highlight a few portions of the administration's proposal that this committee needs to focus on. One, a new housing finance system must first set clear boundaries between the respective roles of the GSEs and FHA. Second, Congress needs to encourage competition by leveling the playing field and creating an open chartering process to provide a path for other companies to attain these benefits. I think we can work together and achieve a bipartisan outcome that creates that competition, that certainty in the marketplace. And I think this can make the American people proud and put us on firm economic standing for a generation to come. And with that, I yield back.
Thank you. I now recognize the gentleman from Georgia, Mr. Scott, for 1 minute.
Thank you very much, Chair Lady. Welcome. Chair Lady, this marks the 10th anniversary of the passing of Dodd-Frank and the tremendous financial crisis that we went to. But there is no more burning point to show the great failure at this point than as we look across the country, in every state, in every community, and it is filled with homelessness. So we've got to take a very serious look at this. And we're hopeful in this committee that we will do so. We've got to focus on certainly protecting that 30-year mortgage. We've got to ensure that sufficient private capital is in place to protect our taxpayers. So there's so much for us to get to. The American people are depending on us, and I sincerely hope that you three gentlemen will open our eyes to much of what we are now only dimly aware. Thank you.
I now recognize the gentleman from Ohio, Mr. Stivers, for 1 minute.
Thank you, Madam Chair. As the members are all aware, Fannie Mae and Freddie Mac have now been in conservatorship for 11 years. I've been in Congress 9 years, and I'm already on the top row. This is a long overdue process that we need to deal with. The committee's seen proposals come and go. We've seen House and Senate proposals, Democratic and Republican proposals. Our witnesses have made it clear in their written testimony that they prefer comprehensive reform imposed by Congress. But if not, they intend to proceed with some administrative reforms. It's my hope that we can use this hearing as an opportunity to restart our work that we should have completed long ago, a bipartisan comprehensive reform that ensures Americans can achieve the dream of home ownership and provides stability to the housing system and prevents any future taxpayer-funded bailouts. This hearing should be the first of many aimed at proving the skeptics wrong and achieving those goals. I yield back the balance of my time.
I want to welcome today's distinguished panel. We will first hear from the Honorable Stephen T. Minuchin, Secretary, U.S. Department of the Treasury. Secretary Mnuchin has testified previously before the committee and needs no introduction. Welcome. We will then hear from the Honorable Dr. Benjamin S. Carson, Secretary, U.S. Department of Housing and Urban Development. Secretary Carson has also testified previously before the committee and needs no introduction. Welcome. Finally, we will hear from the Honorable Dr. Mark A. Calabria, Director, Federal Housing Finance Agency. This is Director Calabria's first appearance before the committee. He has served as Director of the Fhfa since April of this year. In recent years, he has served on the Republican staff of the Committee on Banking, Housing and Urban Development, worked at Cato Institute, and most recently as Chief Economist to Vice President Michael Pence. Welcome, Director Calabria. For purposes of testimony, each of you will have 5 minutes to summarize your testimony. Secretary Mnuchin, you are now recognized for 5 minutes to present your oral testimony.
Thank you. Chairwoman Waters, Ranking Member McHenry, and members of the committee, I am pleased to be with you today to discuss the Department of Treasury's Housing Reform Plan. Last month, my colleagues and I testified before the Senate Banking Committee after the—
Mr. Secretary, will you move your microphone a little bit closer and speak directly into it, please?
Last month, is that better? Thank you. Last month, my colleagues and I testified before the Senate Banking Committee after the release of the plan. The comments and legislative frameworks we have seen from members of both parties reflect bipartisan agreement on the need for legislative action and on the general principles of reform. I'm hopeful with some good faith discussions, Congress and the administration will act in a comprehensive manner to support affordable housing, appropriately tailor the federal government's influence over the housing finance sector, protect taxpayers from future bailouts, and foster competition that will benefit consumers. That is why I was surprised and disappointed by the title of this hearing, which asks whether the administration's plan an end to affordable housing. To be clear, Treasury does not propose and indeed opposes reducing or eliminating the government-sponsored enterprise's longstanding support for affordable housing. I am grateful for the opportunity to clarify Treasury's recommendations here today and explain how our plan will preserve support for affordable housing while also improving the efficiency, transparency, and accountability of the mechanism for delivering that support. Treasury's plan advances for continued government backing for and widespread availability of the 30-year fixed-rate mortgage loan, and the GSEs or their successors should continue helping to fund multifamily housing for low and moderate income and other renters. In addition to this general support for affordable housing, the GSEs have at least 4 key statutory mandates to promote access to affordable mortgage credit for historically underserved borrowers and renters. 1, a duty to serve focused on 3 specific underserved markets: manufactured housing, affordable housing preservation, and rural markets. 2, a requirement to make certain periodic contributions to the Housing Trust Fund and the Capital Magnet Fund. 3, charter authority to promote access to mortgage credit throughout the United States, including central cities, rural areas, and underserved areas. And 4, a requirement to purchase FHFA specified amounts of certain single-family and multifamily mortgage loans that support housing for specified underserved borrowers and renters. Treasury's plan does not include specific recommendations to alter the duty to serve the specified underserved markets or the affordable housing contribution. Treasury seeks to preserve the national service requirement, but with some added protections. With respect to the 4th mandate, the affordable housing goals, Treasury recommends material changes that would establish a more efficient, transparent, and accountable mechanism for delivering tailored support to underserved borrowers. Further, the plan recommends that FHFA continue to coordinate with FHA and Ginnie Mae, who have primary responsibility for providing housing finance support to low and moderate income families that cannot be fulfilled through traditional underwriting, to assure an efficient and appropriate federal law for housing. To be clear, Treasury is not recommending a reduction in support for underserved borrowers. On the contrary, Treasury is recommending a more effective means of delivering the support. I look forward to our conversation here today, one that I hope will continue after this hearing. We welcome your thoughts and suggestions to address the challenges facing underserved borrowers and renters nationwide. Finally, I must emphasize that our recommendations make clear that the administration's preference is to work with Congress to enact comprehensive housing finance legislation. Legislation could achieve lasting structural reform, competitive advantages over private sector. At the same time, we believe that reform can and should proceed administratively pending legislation. Under the leadership of President Trump, I am proud of all the work we have done to create conditions for greater economic growth, more and better opportunities for working families, and higher wages. I look forward to discussing with you critical housing finance reform. I hope the members of the committee from both parties will work with us on passing legislations. Thank you very much. I am pleased to answer any questions.
Thank you, Secretary Carson.
Chairwoman Waters, Ranking Member McHenry, members of the committee, thank you for the opportunity to appear before you today to discuss how the Department of Housing and Urban Development is supporting this administration's efforts to reform the nation's housing finance system. First, like Secretary Mnuchin, I was taken aback by the title of this hearing. If we really want to examine the end of affordable housing, this would be a field hearing in San Francisco or Los Angeles, 2 cities at the epicenter of the nation's affordable housing crisis. Restrictive zoning laws have made the development of affordable housing prohibitively expensive there, driving up rents and home prices to some of the highest in the country and leading to California being responsible for nearly half of our nation's unsheltered homeless population. In fact, HUD's latest data found that California's homeless population increased 16% over the past year alone. Were it not for California's increase, homelessness would have declined nationally. Contrary to what's happening in California, HUD's housing finance reform proposal addresses how to best serve affordable housing need while keeping within the principles outlined by leaders of both parties, including Chairwoman Waters. We look forward to working with Congress to move this legislation forward, but I'm very confident that we are starting from a place of significant common ground about what a future housing finance system should look like. At HUD, we support millions of families with affordable home ownership and rental opportunities through the Federal Housing Administration and Ginnie Mae, providing credit access and liquidity in the mortgage market. We ought to allow the private market to work, but in those areas where it can't or won't work, we must make certain that we continue to target FHA programs to borrowers not served by traditional underwriting. Our plan preserves and strengthens FHA's and Ginnie Mae's pivotal roles while improving the delivery of that support and better protecting taxpayers. Historically, serving unmet housing need has been FHA's most important contribution to the American housing market, facilitating entry into financially responsible homeownership. Without FHA mortgage insurance as an option, millions of lower and middle-income families would lack access to affordable mortgage credit. Take, for instance, a typical FHA borrower. Last year, they were 39 years old, had a credit score of 666, purchased a home for $221,000. First-time home buyers represent 83% of FHA's purchase volume, while 57% of the mortgage endorsements were for low or moderate income individuals, and 34% were minorities. In addition to helping borrowers buy their first home, we also want them to stay in their homes. Our plan calls on FHA to improve its servicing by creating more flexible loss mitigation processes. We are also working to get a more diverse base of lenders back into the FHA program. Depository institutions, which represented nearly half of FHA's lender base in 2010, today represent just 15%. To provide regulatory certainty to lenders so that they will return to offering FHA loans, we are revising FHA's defect taxonomy, updating loan level and annual certifications, and clarifying when HUD and the Justice Department will utilize the False Claims Act to go after allegations of fraudulent lending. Another critical piece of our plan is the need to modernize FHA technology. For decades, FHA has operated on antiquated, obsolete technology that inhibit its ability to appropriately manage risk. As part of our proposal, FHA is undertaking a comprehensive multi-year modernization effort to bring its IT infrastructure into the 21st century. This is FHA's opportunity to move generations ahead to a state-of-the-art system that will fully digitize the entire mortgage process and align it with industry standards. Our plan also calls on Congress to eliminate the statutory cap on the Rental Assistance Demonstration Program, which allows public housing agencies and owners to leverage private capital to preserve properties for long-term affordability. Since its launch in 2012, RED has proven to be an extraordinary success story. A report we're releasing this week confirms what we've long suspected. RED is stimulating billions of dollars in capital investments, improving living conditions for lower-income residents, and enhancing the financial health of these critical, affordable housing resources for future generations. Madam Chairwoman, housing finance reform is the final piece of unfinished business remaining from the financial crisis. It's one of the committee's top priorities, and you have an administration committed and prepared to work with Congress to enact comprehensive legislation. Let's begin that work today, and happy birthday, Mr. Ranking Member.
Thank you very much. I now recognize myself. Oh, please, Director Calabria. You're recognized for 5 minutes.
Chairwoman Water, Ranking Member McHenry, and distinguished members of the committee, thank you for the invitation to appear at today's hearing. Chairwoman Waters, let me also thank you for that kind introduction and welcome to the committee, as well as thanking you for taking the time to meet with me very early in my tenure. I found that a productive meeting, and I hope it's the first of many. Let me also emphasize for the committee, as was mentioned in my bio, having worked on the staff of the Senate Banking Committee, I'm proud that the last piece of legislation I worked on for that committee over a decade ago was an update and modernization of McKinney-Vento, where we expanded homelessness protections for families. I would also note for the committee, having been one of the primary staffers on the Housing Economic Recovery Act, that was the last major housing finance reform. I'll remind the committee, we did that in a bipartisan way. We did it in a bicameral way. I believe we can do that again today. Let me emphasize it is my belief that far too many Americans today lack what each of us deserves, an affordable place to call home, whether it's owned or rented. This is a problem across America in many communities of our country, but as Dr. Carson pressed upon, it is fundamentally, in many ways, a local problem. A fundamental cause of the housing affordability problem are local policies that make it harder and more expensive to build new housing. Examples include zoning, land use restrictions, onerous building codes, permitting requirements. These policies disproportionately hurt low-income families. Our affordability problems, while they can be addressed here in part, will not be solved until local governments remove these impediments that limit the supply of affordable housing in their communities. We should, of course, applaud those many communities, for instance, like Minneapolis, that are upzoning in a responsible manner that will bring more density. And I recognize that many areas in California are trying to address this problem. One part of our mortgage finance system can play a role in this. In fact, all of the parts of our mortgage finance system can play a role. Fannie and Freddie and the federal home loan banks exist to ensure mortgage credit availability throughout the economic cycle. This mission is critical to supporting sustainable homeownership, affordable housing, especially when the economy is weak and mortgage credit tightens. But in their current condition, Fannie Mae and Freddie Mac will fail in a downturn. As we learned in 2008, when Fannie and Freddie fail, housing affordability problems get even worse. Together, Fannie and Freddie own or guarantee $5.6 trillion in single and multifamily mortgages, nearly half the market. Yet until very recently, they were limited to just $6 billion in allowable capital. To do the math for you, when I walked in the door, the combined leverage ratio at Fannie and Freddie was nearly 1,000 to 1. Last month, Secretary Mnuchin and I agreed to allow the enterprises to retain capital of up to $45 billion combined. This is a significant step forward. Retaining just 1/4's net worth has improved their leverage ratio by nearly half. So proud to say in my 6 months, we've doubled the capital at Fannie and Freddie. But it still stands at nearly 500 to 1. In contrast, our nation's largest banks have an average leverage ratio of 10 to 1. So let me put that in perspective. The leverage ratios that we see at our largest GSIBs, Fannie and Freddie are leveraged 50 times that. Combined with low capital, credit risk has been increasing in recent years by the purchases by the enterprises. Some risk factors now exceed the levels observed in the years leading up to the crisis. While average borrower credit scores are better today, the enterprise's share of low down payment and high DTI mortgages are actually higher than they were pre-crisis. This pro-cyclical pattern of increasing mortgage risk harms first-time and low-income borrowers. It makes it easier for them to become highly leveraged at the top of the cycle and makes it harder for them to keep them home when the cycle turns. Borrower debt to income is a widely used measure of ability to pay. It's actually spelled out in Dodd-Frank. It is adversely impacted in a weak economy when incomes tend to stagnate or decline and household debt levels will stay the same. Between 2006 and 2008, the enterprises nearly doubled their purchases of loans with debt-to-income ratios greater than 43%, higher than that spelled out in the qualified mortgage rule. Yes, market-wide delinquency serious rates are low today, but they were low before the crisis last time. They were low in 2004. They were, in fact, low well into 2007, 2008. Delinquency rates today are a function of a strong labor market, rising house prices. If these were to turn, the underlying risks in the system would appear. Regardless of loan quality, when there are defaults, when the tide turns, and at the current levels of capital, let me be absolutely crystal clear, Fannie and Freddie will fail in a downturn in their current condition. Of course, it is my objective to get them out of this condition. Our housing finance system is supposed to serve homeowners and renters while protecting taxpayers. I believe it has failed on both accounts. Let me commend my colleagues for coming up with what I believe are reasonable, thoughtful plans that present a path out of this. Let me say these plans are broadly consistent with my top priorities, which are first, to cement FHFA as a world-class regulator so as to ensure Fannie and Freddie operate in a safe and sound condition. Second, to end the 11-year conservatorships. And third, as required by statute, to, quote, foster a competitive, liquid, efficient, and resilient national mortgage finance system. Chairman Waters, I share the principles for housing finance you've laid out at the beginning of this Congress. I look forward to working to this committee as we move forward. Thank you.
Thank you, Director Calabria. I now recognize myself for 5 minutes for questions. Director Calabria, you recently announced that you're expecting to make a decision very soon about FHFA's proposed capital rule. This rule would be a key factor in determining whether pricing of GSE loans will work for a broad base of future homeowners or unnecessarily block credit-worthy people out of the American dream of home ownership. As you know, civil rights advocates and others have raised concerns that this rule would increase incentives for Fannie and Freddie to engage in more risk-based pricing, which would eliminate cross-subsidies that help minorities and other underserved borrowers obtain mortgages at affordable rates. There are also concerns that you will require up to 5% capital, which many analysts believe to be too high. Will FHA's final rule on capital levels address these concerns?
Chairwoman, thank you for that question. We are in the middle of a rulemaking. I hope to be able to announce within the coming weeks whether we will have to repropose the rule or not. I would very much agree with you. I view this as perhaps the most important rulemaking that I will engage in my tenure. I think it's incredibly important to get it right. We've been talking to a number of constituencies. As you know, there are a number of factors to balance. I think we're going to try to do our best, and I think we will get into a point where this will be balanced. I feel highly confident that where we will get will maintain access and affordability, but also protect the system.
Thank you very much. At what level of capital would you feel that the GSEs are safely capitalized?
Since we are in the midst of a rulemaking, I think it's appropriate for me to refrain from giving specific answers on the rulemaking. Again, we'll keep.
Do you believe that a higher level of capital would affect the pricing of a mortgage?
I believe that as this happens for all large financial, let me start. I believe all large systemically important financial companies, whether it's Citibank or whether it's Fannie Mae, should be well capitalized.
I understand that you have I want you to understand that you have an obligation to the taxpayers, but you also have an obligation to ensure broad access to credit for creditworthy borrowers. Your job requires you to strike an appropriate balance between these goals. However, based on what I can see from your actions and comments to date, I am concerned that you're overly focused on shrinking the GSE's footprint, even if it comes at the expense of blocking hardworking families out of home ownership. So I would encourage you to thoughtfully consider the feedback that you are receiving from civil rights advocates and others about this proposed capital rule and ensure that these concerns are addressed in a final rule. Further, Director Calabria, we met at the very beginning of your tenure as director of FHFA, and in that conversation, I stressed the importance of working to increase home ownership opportunities for minorities. Sometimes people conflate minority home ownership with affordable home ownership, and I want to be clear that these are two different things. We have made important strides in opening up affordable home ownership opportunities, but we still have African American home ownership levels at rates lower than when the Fair Housing Act was passed in 1968. And we have an astonishing racial wealth gap that reflects this gap in home ownership rates. Do you agree that FHFA has a responsibility to address the racial home ownership gap and not just access to affordable home ownership generally?
First, let me assure you on your previous point that we will work with and take in all comments for all stakeholders, civil rights groups, and others. I guarantee to you, we will meet with everybody and talk to everybody who wants to meet with us and do our best to see that those concerns are addressed. I would emphasize one of the biggest drivers of the increase in the racial wealth gap during the crisis were that low-income minority households had higher leverage ratios going into the crisis and were hurt more when the downturn. So I am committed to making sure we do not see a repeat of what we went through in 2008, 2009, 2010. I believe that was a devastating time on low-income and minority communities, and I'm committed to making sure that does not happen on my watch.
So are you telling me that you have specific actions that you have taken and actions that you plan to take to increase access to home ownership for minority borrowers?
Let me first emphasize that our emphasis on homeownership will be on sustainable homeownership. I think it is critical when we get families into homeownership that they are able to stay into homeownership. I don't believe we do anybody a favor if they just are cheering through and they lose their house. Foreclosures are devastating.
Can you use the word minority?
I can use the word minority, but I think we want to look out for all families, minority families.
Well, I know you are, but I specifically asked you about the wealth gap and the problems that we have with home ownership for minorities. Will you address the word minority? If it's difficult for you, then I will yield my time back. And with that, I will call on the gentleman from North Carolina for 5 minutes for questions.
Safety and soundness. safety and soundness to our financial system, to the footprint that the three of you oversee, is your primary obligation to us as taxpayers. Safety and soundness. Director Calabria, safety and soundness is your primary obligation.
Correct.
A financial collapse of these institutions under your watch is nothing that the three of you gentlemen would seek, I would hope, nor in the interest of American taxpayers. So let me begin. We have 116 items of reform from the Treasury and HUD. 116 items. They fall into two different baskets. One that you can do through administrative action that is within your right under law that the Congress has written. The other requires legislative action. Almost a third of all the recommendations in the plan were legislative reforms, 18 from Treasury, 17 from HUD from my account. Given the sheer volume of work that needs to be done to build the modern housing finance system that the American people deserve, how important is it that Congress roll up its sleeves and legislate here? We'll just go across the panel. Secretary Mnuchin.
I think it's very important, and that's by far our first choice.
I think it's obviously very important if we want to be able to have things that are sustained across administrations that help the American people.
Absolutely critical.
Director Calabria, Federal Home Loan Bank membership, this was reviewed under Mel Watt's directorship and limited. Are you going to seek to have a review of the Federal Home Loan Bank membership requirements?
We are. Given that there's a large number of membership questions at different banks dealing with REITs and CDFIs and captive insurers, we've decided that we will soon be doing a request for information on the membership issue at large, so we could hear from stakeholders, we can get feedback. If, depending on what comes out of that request for information, we may or may not do a rulemaking clarifying this, but I think it's important that we try to solve the membership issue holistically.
Thank you. Director Calabria, there's a New York Times piece from September 30th of this year outlining work done by researchers at the University of Montreal and Johns Hopkins about flood risk via the portfolios at Fannie and Freddie. It outlines that there are some alarming trends, according to this study, that institutions are passing off increased flood risk to certain mortgage properties. And they're passing that off to Fannie and Freddie. Are you familiar with that study?
I've read the underlying study, yes.
Yes. Madam Chair, I ask unanimous consent to submit for the record the New York Times piece outlining that study.
Without objection, such is the order.
Thank you. It's an interesting finding that there's a potential $600 to $100 billion set of risks that are pushed off to GSEs from institutions. You said you're familiar with this. Do you agree with the premise or the conclusion?
While I could probably take some issue with some of the methodology, I think the overall point of the study is largely correct and really underlines the importance of doing effective reform of the NFIP, because I am concerned that if we don't have a functioning, sustainable national flood insurance program, that much of that risk will get sent to Fannie and Freddie.
Do Fannie and Freddie currently run any assessment of the underlying flood risk, their overall portfolio?
Not when there's a case of if the NFIP is covering that risk, there's generally an assumption, but this is something we've started to look at. We're very concerned about the impact of natural disasters on Fannie and Freddie's risk profile, especially given the fact that they're 500 to 1 leverage, so even something modestly that goes wrong in the environment could leave them underwater.
So is there a separate assessment done by Fannie and Freddie using outside data, or is it only NFIP and FEMA provided data?
If I could follow up with the committee and get some more actual what Fannie and Freddie use in terms of outside resources, I'd be happy to provide that information.
That would be, I think, useful and helpful so we understand the risk here, if in fact there is serious risk. And what are you doing to ensure that FHA runs these risks, and especially given the question of volatility and the relative storm sizes that we've had of the last cycle of storms?
Well, we are looking at a lot of the risks. These happen to be coastal areas. There are many happen to be high-price areas. There tend to be a lot of price volatility in these areas. We are trying to make sure at this point, particularly given the leverage at Fannie and Freddie, that they can withstand any storms that may come.
Thank you.
The gentlewoman from New York, Ms. Velasquez, is recognized for 5 minutes.
Thank you, Madam Chair. Secretary Carson, last week, your Chief Financial Officer and your Principal Deputy Assistant Secretary for Community Planning and Development admitted before Congress that HUD intentionally missed a legally required deadline that would have made congressionally appropriated funds available to Puerto Rico. Let me ask you, where specifically in federal law is HUD empowered to unilaterally withhold CDBG DR funds that have been appropriated by Congress?
Well, as you know, Congress has specifically mandated that the Secretary of HUD make sure that funds that are allocated or provided for certain jurisdictions have the resources and the
Sir,
capacity to manage them.
Reclaiming my time, please answer my question. Your Chief Financial Officer testifying before the Appropriations Subcommittee on Housing said that you withheld funds that were federally appropriated by Congress to Puerto Rico. So my question to you is, where in federal law you are empowered, HUD is empowered to withhold money that was supposed to go to Puerto Rico?
I can't give you chapter and verse, but it does exist. Congress has specifically said to the Secretary, you may not give
Secretary
funds
Carson,
unless you have
reclaiming
concluded
my
that they-
time, since you are not going to answer my question.
Seemed like an answer to me.
Reclaiming my time. Your staff previously claimed.
Are you looking for an answer or a sound?
No. Let me give you more background. Your staff previously claimed the agency delayed grants agreements related to CDBG DR funds to await an ongoing OIG audit. However, the Inspector General wrote to you in mid-September. She stated explicitly, and I quote, "I did not recommend that the department take any specific actions with respect to Vivienda, including withholding funds, delaying finalization of grant agreements, or delaying publishing Federal Register notices." So if it was not the Inspector General pushing for this delay, I wonder if this was politically motivated. Did anyone at the White House, including the President or the Chief of Staff, ask you to withhold money that was supposed to go to Puerto Rico?
Interestingly enough, a lot of what we do is dictated by common sense. If you have a jurisdiction in which there are 3 changes of government within a month, and which has historically had difficulty with financial management, to put an unprecedented amount of money in there without the appropriate controls is
That is not the question here, sir. Your IG said that they have taken oversight steps in Puerto Rico. You withheld the money just to Puerto Rico, and you know what? The simple answer to this is the disdain and contempt of this administration toward the people of Puerto Rico. This is an abuse of power. It speaks to this administration's disregard for the people of Puerto Rico. 3,000 people died in Puerto Rico under your watch. And I will ask for your administration, HUD, to send to Congress and to this committee every communication related to Puerto Rico. And you know what, sir? We're going to find out what motivated for you to withhold this money for the people of Puerto Rico. If this was about corruption, as you claimed in the press, so deal with your own corruption when FEMA officials were arrested in Puerto Rico.
We have nothing to hide, so I'd be glad for you to get that information.
yeah, one way or the other, we're going to know the truth. So my next question to you, sir, well, I'll yield back, Madam Speaker.
Madam Chair, inquiry of the chair. Unparliamentary language when you're accusing somebody testifying of personal corruption is unbecoming of this institution and not appropriate in parliamentary language before this debate. Members should be admonished to keep their opinions at opinions, but to accuse a panelist and a cabinet secretary of personal corruption
No.
is not becoming.
Excuse me.
Will
The
you
gentle-
yield?
Nor
Will you
according
yield?
to-
I'm talking
Just
about
one moment.
corruption where 2 officials of FEMA were arrested in Puerto Rico.
The time belongs to the gentleman at this point. Have you finished your point?
Yes,
The
ma'am.
gentleman has finished his point. Will you yield to the gentlelady from New York?
Happy to
He
yield.
yields.
Sir, I'm referring to 2 FEMA officials that were arrested in Puerto Rico. So the excuse that has been used by this administration is that they will not let the money to flow to Puerto Rico unless they take steps to make sure that the money is used with the intended goals. However, the IG of HUD, in a letter that sent to the Secretary of HUD, said that the government of Puerto Rico has complied with everything that were asked from them. And yet, of the 17 states and localities that got disaster relief fund, Puerto Rico was the only one whose money was delayed. Enough is enough. This is
Reclaiming
about
my time, Madam Chair. Madam
human
Chair.
lives.
The time belongs to the chair. The gentleman has noticed his concerns. They have been responded to, and
Madam Chair,
the
they've not been
gentlelady was
responded to.
referring to the agency, and if your concern is about language unbecoming a member, then you should address that to all of the members. At any given time, we have all had language that one could consider unbecoming.
Madam
With that,
Chair. Madam
we will
Chair.
move on.
To accuse a cabinet secretary of personal corruption, which is what the gentlelady did, is not becoming of members of this committee.
The gentleman is out of order. The gentleman from Oklahoma, Mr. Lucas,
Ridiculous.
is recognized for 5 minutes.
Secretary Mnuchin, let's return to Treasury's plan that lays out several conditions to meet before ending the conservatorship of the GSEs. We've touched on capital requirements here this morning. I think in an indirect way we've discussed ensuring that there's no market disruption. Can you expand for a moment on the timeline that Treasury is looking at to meet these conditions and to perhaps end the conservatorship?
Thank you. It's a pleasure to have a question on this subject. First of all, I think as we've addressed, these bipartisan concerns are something that need to be addressed before we take these entities out of conservatorship. The first step was Director Calabria and I amended an agreement to make sure that the entities could retain capital. A critical part is to make sure there is proper capital before we would consider ending conservatorship.
The plan also recommends reforms to protect the U.S. taxpayer. Could you expand on what reforms are needed to ensure that shareholders, not taxpayers, bear the losses during any potential future downturn?
I think the first issue is, again, to make sure we have proper capital. The second issue is to make sure that the director has appropriate reforms and that there is proper underwriting and proper allocations.
And again, one more time, you would envision a timeline of this happening?
I want to be careful in speculating, but I would hope that it's over the next 1 to 2 years. And again, it could be quicker or longer, depending upon market circumstances.
Thank you, Secretary. Secretary Carson, the HUD plan indicates that action should be taken to remove barriers to further adoption of manufactured housing. Like my colleagues here, I am very sensitive about my constituents too, and manufactured housing is particularly important in the rural communities that I represent in Oklahoma. Can you elaborate on how HUD can move forward eliminating those regulatory barriers?
Thank you. That has been subject of great concern for us. As you know, in rural communities, particularly, manufactured housing accounts for about 20% of all the single-family housing. And yet, a lot of the regulations that have been in place treat manufactured housing as trailers and double wides, when in fact there has been tremendous progress made with manufactured housing. I think at this stage of the game, in many cases, you would not be able to distinguish manufactured housing from a site-built home, and they tend to be much more resilient. And therefore, it's really an updating that needs to be done, and we have concentrated a lot of effort on that, making extremely good progress. And I think it's one of the areas where we can make a lot of progress with affordable housing, because you're talking about things that cost considerably less than site-built homes.
And for many of my constituents, it's the entry-level housing opportunity.
Exactly.
With that, Madam Chair, I yield back the balance of my time.
Thank you. The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Director Calabria, following the 2008 financial crisis, our Financial Services Committee helped enact mortgage reforms under Dodd-Frank, and so I'd like to get an understanding from you of exactly where we are. As I mentioned earlier in my opening remarks, we're now at the 10-year anniversary of Dodd-Frank. It doesn't seem like 10 years, but it's about time we kind of look back and see where we are now after 10 years in the critical housing area. So what is the current default risk in each of the GSE's portfolios?
First, Congressman Scott, let me say how much I very strongly agree with you. I think this is an incredibly appropriate and important time to take a look back. The most serious delinquency rates for Fannie and Freddie are respectively 0.67 and 0.61. I will note that these were similar to what they were at the beginning of 2008. So again, there's an old adage that the worst loans are made in the best of times. I think that we should keep that in mind today.
Well, let me ask you a follow-up. How does that risk compare to the default risk in the GSE portfolios in the latter stages of previous economic growth cycles?
So certainly over time, there's been a trend increase. If one goes back, say, to the 60s or 70s, my recollection is that the default rates were significantly lower than they were in the last previous cycle. So certainly the last cycle was an elevated level of foreclosure, elevated level of delinquencies, obviously on the part of all market participants, but also with the GSEs. And hence my concern about if this cycle turns, with my concern of whether the GSEs are ready.
Well, it's very good to get your points on this as we look back after 10 years. But let me follow up that. There's been a lot of focus recently on debt-to-income ratio, given the impending expiration of the QM, or qualitative mortgage patch. So, Director, do you feel that the debt to interest deal profile of the DTI profile of the GSE's portfolios, when taken in isolation, is a good measure for us to determine default risk?
I will start out recognizing that the debt-to-income ratio was explicitly mentioned in Dodd-Frank. It is explicitly mentioned. It is perhaps the best measure of ability to pay rather than willingness to pay. And so I do think it's an important factor. I would, of course, be the first to say that borrower credit and loan-to-value are stronger predictors of default. But again, we'll note that Dodd-Frank specifically lists out a set of factors to be considered within the statute.
Well, the very highly respected Urban Institute found in a recent study that borrowers with DTI ratios above 45% had higher default rates than those below 45%, buyers before and during the financial crisis. But high DTI borrowers have actually had lower default since 2011, as I'm sure you know. So with that in mind, is debt to income the right measurement of underwriting quality?
Certainly with appropriate overlays, I think you can offset that risk. And if where the gentleman is going, I would certainly be very supportive of Congress revisiting having that DTI mandated within the statute. I certainly think it's past time to reevaluate the effectiveness of the qualified mortgage rule.
Thank you. Dr. and Secretary Ben Carson, I can't let this opportunity escape for you to answer us. Do you have, in your own opinion, a full grasp of the impact of homelessness in this nation? Do you? And if so, what are you willing to say about it? You are the person that's at the point of the spear in our federal government to deal with homelessness.
I've had a lot to say about it.
Unfortunately, the chairlady has brought the hammer down, but I certainly look forward to hearing what you have to say later on. Thank you.
The witness is requested to provide an answer in writing for the record. The gentleman from Florida, Mr. Posey, is recognized for 5 minutes.
Thank you very much, Madam Chair and Ranking Member McHenry, for holding this hearing today on the administration's plans for reforming Fannie Mae and Freddie Mac. It's an important subject, and I regret that it has fallen to levels of personally denigrating Secretary Carson, asking him questions and not allowing him time to answer them. I and many, Dr. Carson, think you have done an outstanding job for our country. I've said it before to you, I don't know why in the world you'd take that job with all you have to lose and nothing to gain. And I know it's for the betterment of our country and our government and the people and how the people live in this country, and I'm eternally grateful to you. I'd like to give you a few moments, if you would prefer, to respond to the questions that you were not allowed to answer when they were asked.
Yes.
You had to be still while he threw some more insults your way, but if you'd like to take time to respond now,
Yes.
you have that time.
Well, I appreciate that. You know, obviously the reason I took this job is because I feel that our country is in trouble, and we need to do everything we can to provide the right kinds of opportunities. At HUD, for instance, you know, it was an organization that was largely focused on just getting people into programs, getting people on the roof, and that's not a bad thing, but I really want to maneuver us to a place where we're getting people out of programs and getting people to a level of self-sufficiency. So we've really aimed at that. You know, the question that was asked about homelessness, this is a very serious problem and one that I think is solvable in our country. You know, if a place like Tokyo, which has more people than New York City, can solve homelessness, then certainly we have the capacity to do so too. But we really must understand the reasons behind the homelessness. There's a direct correlation with the amount of regulatory barriers, home prices, apartment prices, and homelessness. And we need to be willing to face that. We can't solve this problem by just throwing money at it. We really have to look at the etiology of the problem and deal with the zoning restrictions, deal with the noise restrictions, with the density requirements, with all of the many regulatory barriers that cause the prices to go where they are. And this is something that is a problem that for Democrats, for Republicans, for independents, for everybody. And we need to stop making everything into a political argument and fussing and fighting like 3-year-olds and spend time actually sitting down and talking together. I looked at the tenets that the chairwoman has placed. They're exactly the same ones that I agree with, the same ones that we're working with. and yet we've not been able to sit down and talk about it. I think we need to be able to discuss these things. We're intelligent people. We can solve these problems. Sitting around demonizing each other makes absolutely no sense whatsoever and will not result in any progress.
Thank you, Doctor. You were also, speaking of the word demonized, for, if I understood the words correctly, making sure that the money sent was spent as Congress intended for it to be. Would you comment? You were cut off before you could explain that.
Well, first of all, I would like to explain that in Puerto Rico, they do have access to $1.5 billion, and about $2 million of it has been drawn down. So I don't want anybody to be under the impression that, you know, they're having a crisis that can't be resolved by utilizing the money that's already available. Normally, it takes somewhere between 1.5 years to 3 years to spend that much money. Having said that, you know, the money for unmet needs and mitigation will be gotten to them as soon as possible in a way that is safe with a federal monitor in place. And we would do that for virtually anybody. This is the largest amount of money that has been given to any jurisdiction in the history of HUD. And I think we have an obligation to the taxpayers to make sure that it is properly utilized to impact in a positive way the people of Puerto Rico.
Do we have your assurance, Doctor, that we are doing everything humanly possible through your agency to assist the people in Puerto Rico?
Absolutely, and that's one of our highest priorities.
Thank you, sir.
The gentleman from Missouri, Mr. Cleaver, who is also the chair of the Subcommittee on National Security, International Development, and Monetary Policy, is recognized for 5 minutes.
Thank you, Madam Chair. I actually am deviating from the affordable housing issue because I have two people here. I'd like to deal with the Opportunity Zone and housing because I have the Treasury Secretary and the HUD Secretary. But because of what we have on our agenda tomorrow, an examination of Facebook, I'm going to deviate a bit. And Mr. Secretary, thank you for the response to my letter, and I thank you for proactively probing the issue of Libra. And I want to lift just a little section of your letter and ask for a little bit more on it. Your letter says FSOC's working group on digital assets is, and I quote, monitoring developments related to the Libra project and is working to identify and assess potential risks and gaps in authorities that may require more attention, unquote. Can you go just a little further on that, Mr. Secretary?
Yes, absolutely. And first of all, thank you for your interest in this subject. I do understand the diversion. It is an important subject. And we spent a lot of time on this, and we look forward to working with you. I've met multiple times with the representatives of Facebook. We've told them that we thought that their launch was premature, that they had not addressed fundamental issues around money laundering, BSA requirements, and other. We have set up a subcommittee of FSOC not just to address this, but to address other crypto assets and make sure we have the proper regulatory. We're working on a intra-agency basis, I think, very effectively. I also concluded meetings last Thursday and Friday in D.C. with our international central bank governors and finance ministers. This is a discussion that's going on at the G20, the G7, and FSB as well.
Thank you. Is the FSOC working group going to assess systemic risk and apply whatever appropriate regulations are needed?
Yes, that will be one of the issues amongst many that we will look at.
Okay. Your letter implies that the financial institution participating in the Libra network may be an avenue through which FSOC regulates Libra. Is my interpretation correct?
That is correct.
Do you think that financial regulators have sufficient tools now to confront the potential systemic risk associated with Libra? I don't want to be a Cro-Magna man or troglodytic, but this kind of frightens me, this whole issue with Libra, and so it's unclear whether U.S. and foreign regulators will have the ability to monitor the Libra market and require corrective actions if necessary.
I think right now in the United States, we do have the proper tools, but if we need more tools, we'll come back to Congress. My concern is more internationally, and we're working through the international organizations to make sure that they have the similar standards that we use within the United States to combat terrorist financing.
Okay, Mr. Secretary, Mr. Secretary, I was excited about the opportunity zones. I still am semi-optimistic and excited, but the response has not been what I thought it would be, and it seemed to me that it was perfect for housing because of the 10-year period when we are talking about capital gains tax being forgiven. But it's just not turning out, the activity is not turning out at a level that I had anticipated. And I don't know what the national picture looks like, but can you address, is there a need to tweak it, or what do we need to do to get a greater response?
Well, I think one of the things that will be helpful is for us to make known to individuals what is actually happening. You look at some of the projects that are going on in Miami. In your own area, there's a very nice project going on across the country. And we're in the process of putting together on the website information so that can be disseminated.
Thank you. Madam Chair, I'd like to have this letter from the Secretary part of the record.
Without objection, such is the order.
Thank you.
Gentleman yields back. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes.
Thank you, Madam Chair. Welcome, panel. I'd like to start with Secretary Mnuchin. Mr. Secretary, last week I sent you a letter. I hope that you were able to receive that, with a group of 28 bipartisan members of Congress urging you to request a CECL study from the Office of Financial Research. The letter outlines the statutory requirements of FSOC and OFR, which is to examine issues that could affect financial stability. I've discussed this with many members of FSOC. They tell me they're supportive of that position. Every agency, every federal agency would do a study, and in order to be able to issue a ruling, it's required by the Administrative Procedures Act, and yet FASB has not done that. So to me, this particular accounting standard is probably a seminal issue of this committee, I think, over this next several months, from the standpoint of what it could do, I believe, to the economy, to the housing industry. So I guess my question to you this morning is, have you received the letter, and are you willing to ask OFR for a study?
Thank you. I have received your letter. I appreciate your interest in this subject. It is an important subject. We've talked about this subject several times at FSOC. We're pleased at least there are certain delays in implementation. And I will be discussing your request at the next FSOC meeting to see if the committee thinks we should do this, as you've said. But thank you for your interest.
Well, I appreciate that. I think that, to me, again, I think this is a ginormous issue. I think it's going to affect these other two gentlemen here, the way they manage their agencies. Mr. Carson, you stated a while ago that 57% of the loans that FHA has are low to moderate income. Is that correct?
Yes.
What is the total percentage of loans, so out of the loans that are all made this year, what's the percentage that FHA would be involved with?
The total percentage of loans that FHA is involved with, did you ask?
Or percentage of the total loans made this year, what percentage would be FHA would be involved with? So if there's 100 loans made this year, how many loans would be FHA involved?
I think I would maybe see if Director Calabria might have the answer to that.
Well, my recollection, I don't have the number in front of me, my recollection of the market share, certainly in the first-time buyer market, particularly FHA, I think is close to half, 40, 50%. They're probably about a third of the overall market is my recollection. Of course, we can get the data for you.
Okay, Mr. Calabria, what's the percentage of low and moderate income for you?
Well, first of all, I think if you want the bigger picture, you combine Fannie and Freddie and FHA, you're getting between 80 and 90%. And this is really a point I would emphasize that is different from pre-crisis. Almost all of the mortgage risk in the market today is being backed either directly or indirectly by the taxpayer. And let me emphasize, I don't believe the taxpayer has ever been more exposed to the mortgage market at any other time in American history than they are today.
Okay, my question though is a low and moderate income. Do you have a percentage of, if 85% to 90% of the market is through you two individuals and your agencies, what percentage would be? Mr. Carson said about 57%, so what do you think the total would be?
34% of what we do is for minorities. And as was mentioned before, low and moderate income, about 57%.
Okay, would that be about the totality then of what you're looking at, Mr. Calabria, for your agency as well?
Yes, although I'll certainly emphasize that the footprint in low and income minorities is much higher in FHA than it is for Fannie and Freddie.
Okay, what is the source of revenue? What is your source of income for Fannie and Freddie? Your G fees?
Primarily G fees with some modest portfolio earnings. So they engage in portfolio activities where, of course, they'll sell debt, buy assets, and earn a spread on that.
Mr. Carson.
Our money comes from the financial activity, the loans that are made, the fees that are.
So if you have to increase your capital, if you have to increase your ability, especially Mr. Calabria's position here, and Mr. Carson as well, I guess, have to increase your position to be able to absorb losses. As we've just said, it's 500 to 1. I mean, in my world, when I was a banker, I mean, I'd go apoplectic as a examiner. This can't happen. But so how do you if your only revenue source is G fees or loan fees, it would seem to me that you have to raise those fees in order to be able to handle the additional reserves it's going to take to handle this. Is that correct?
Well, now, I'm just going to say of the entire market, FHA is not 50%. It's like 14, 15, 16%.
Okay. My question, though, Mr. Calabria, you're going to have to raise G fees, in my mind, to be able to raise your capital. Is that correct?
I'll emphasize that we have been setting G fees in the past based on, if you will, shadow amount of capital under.
Thank you.
The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Madam Chair. I'd like to actually, pick up on this as a question of, setting the G fees and the profit sweep and where it goes. Now, prior to the changes that you're in the process of making for the profit sweep, where did the profits end up?
They were swept to Treasury.
So the U.S. taxpayer got the benefit of those. Now, after you make the changes, whose pocket does it end up in that point?
It builds capital at the GSEs.
So it's the shareholders of the GSEs that retain that?
No, it builds capital at the GSEs to protect the taxpayer in case the GSEs become insolvent.
And ends up as the shareholders of the GSEs will then be able to sell those,
I will note the obligation. So in the letter agreement that we recently signed, there was an increase in Treasury's liquidity preference at the same time that there was an increase in capital. So the taxpayer is being protected here.
But where do the profits? I mean, the GSEs are very profitable, and depending on where you set the G fees, what the mortgage standards that you eventually settle with, that will have a huge effect on their profitability. And so you will be, in complete control of the profitability of the successor GSEs or any new competitors as you privatize the business.
First, let me emphasize, by statute, they already are private shareholder corporate entities, so there's no privatization. They already are private. That's what the law says. I am following the instructions that have given me by Congress to get them out of conservatorship. That's what the law says. That's what we're doing.
Okay, but now when they failed, we all have to recognize that these would not exist had the taxpayer not bailed them out during the crisis. And during a comparable crisis in the future, these entities or any comparable new entities that you're contemplating will be bailed out simply because of you can't let the housing market implode in a comparable situation.
Correct, which is why it's important
Correct.
to have strong capital.
Right, and it's also why the government has to figure out how to charge how much for this guarantee.
Congressman, let me assure you in that I believe in the amount of time it would take us to build sufficient capital to get out, that this body will have significant time to be able to legislate a different path forward if you so choose.
Okay, my difficulty is that, your decision to do this and other decisions you're making is having a huge effect on the share prices at which they were traded. Now, let's talk a little bit about those shares. It was well documented in the Senate's Permanent Subcommittee investigation that hedge funds such as Paulson and Company designed CDOs and other securitized products to fail, and that these same hedge funds then bought shares in the zombie GSEs for pennies on the dollar after the government had bailed out Fannie and Freddie. And what's more, some of those principals at those hedge funds, including John Paulson, have served on advisory committees to the president on this very issue. And so my question is, I guess, to Secretary Mnuchin, what sort of conflict of interest vetting took place to conclude that that was appropriate?
Well, first, let me just explain that the Treasury has a giant obligation that needs to be paid back.
I just want you to describe the conflict of interest vetting that happened.
I understand, but you're saying a premise that these shareholders are getting a benefit of a sweep.
Has the share price, has the trading share price gone up?
I don't really look at the share price one way or another.
All right, could you get back to us on that in case you're unaware of it? All right.
But as it relates to any conflicts of interest at Treasury, we have full ethics.
To the entire administration and everyone who is making the decisions about the shareholder sweep, I guess that applies to. Director Calabria, do you have anything to say about that?
Let me first add, I very much am on the record over the years in saying in 2008 what we should have done is wiped out the shareholders.
I agree completely, and right, but that should be your guiding principle going forward instead of putting more money in their pocket.
If the circumstances present itself to where we have to wipe out the shareholders, we will.
I look forward to that. But now, however, I was concerned that on October 10th, you participated in an event at George Mason University where you commented that the that FHFA was looking at ways for Fannie and Freddie to increase their return on equity, okay? So that means that would presumably increase the amount that was, eventually going into the shareholders' pocket. So it's completely unclear to me who you're actually working for here.
I'm working for the taxpayers,
when you make that kind of statement. Well, then why are you concerned about the return on equity?
Because we need
which
to
ends
build
up in the shareholders' pockets?
Because these entities are leveraged 500 to 1. It is essential to build capital now before a downturn.
If you are planning on privatizing them. Anyway,
Already
I agree completely that we should have and that we should still wipe out these shareholders, and look forward to working with you on that. Thank you. Yield back.
The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Calabria, I just wanted to make sure that you were able to wrap up what your thoughts were on the G fees that had sort of extended over the last two questionings.
Thank you, Congressman. I would really emphasize, and I certainly hope that we never see another downturn in the housing market, but I believe it's my responsibility as a financial regulator to hope for the best but plan for the worst. In having witnessed the devastation that this impacts on families and communities, that I think is absolutely critical to get Fannie and Freddie in a condition where they can survive a downturn, and that requires building capital as soon as possible.
Okay, so FHA has sort of attempted to grow its way out of some of the fiscal problems and displace private capital, and it has expanded really taxpayer risk, correct? Secretary Carson or Director Calabria?
We're not trying to necessarily grow our way out of risk. FHA really acts sort of as an accordion to make capital available and credit available at times of economic distress.
So it should be counter-cyclical?
Yes.
Okay, but we're seeing, I think we're not seeing that right now, are we?
I think we are. I think at the time of the height of the crisis, FHA expanded enormously.
Sure. Yes, I wholeheartedly agree with that. What I'm concerned about is how do we make sure we get private risk back into the system? That's what I'm really trying to drive at.
Yeah, and one of the things that you probably noticed in our plan is maybe having some tiered risk type phenomena whereby we make the contracts based on the risk factors that are involved rather than just having a one-size-fits-all model.
I'm puzzled by some of my colleagues who seem to think that we ought to declare everybody has a 720 FICO score and that we should all treat all debt and all mortgages the same, and there shouldn't be any sort of risk analysis, yet we're going to castigate you for having risk in there, and it sounds like a have a cake and eat it too kind of scenario in many ways. And I guess that's what I'm trying to drive at is what are the key components of a market infrastructure that need to be in place to incent that additional private capital to enter into the marketplace? Director Calabria.
If I can make a point, and I would really want to emphasize that the I think important question that Congressman Scott asked on QM. Part of this is getting the rest of the regulatory playing field level. So, getting to a qualified mortgage rule that works for all lenders. I think it's also important that the SEC gets to a Reg AB that works for securitization. Yep. And so part of the reason that so much of the risk has gone to Fannie and Freddie and FHA is Fannie and Freddie and FHA have been exempted from so many of the rules that all other market participants have to live under. So I think it's critical that we get to a level playing field where smaller entities, where entities across the spectrum can all compete in a level, fair playing field.
And that takes greater standardization, correct?
Correct.
Okay. I'm going to real quickly, I've got about a minute and a half here. Director Calabria, you've said many times your agency needs to be not only a conservator, but a regulator. And just how can you accelerate those goals here in the next time? Because I'm worried a number of areas that Fannie and Freddie are actively engaged in our activities, not necessarily served by the primary mortgage market and not consistent with what congressional charters have laid out.
Thank you, Congressman. Really great question. Let me emphasize, historically, the agency within conservatorship has used conservatorship as a substitute for regulation. So one of the things that we're doing is going through, for instance, the directives that have been issued in conservatorship in thinking about what we need to be able to do as supervision. We're very close to reviewing and examining the supervision team. If we need to bring on more resources, we'll bring on more resources, but we need to be able to strengthen the supervision and regulatory function at Fannie and Freddie before they get out of conservatorship.
And so it's a natural time to do that review.
Absolutely.
Okay. One last thing here in my remaining 30 seconds, just about GSE multifamily lending. Fannie has been very involved in this DUS lender model, which is a risk retention model. And I believe you've got some rules that have been proposed, so I'm not expecting answers on that. But I am curious, what economic analysis did HFA perform to justify the capital requirements?
There is, as you mentioned, a part of the capital rule that applies to the GSE's multifamily business, and we were closely looking at that as we make final decisions moving forward on what we should do in the capital rule. But as you've noticed, since we are in rulemaking, I can't go into detail on that today.
All right, thank you. I yield back.
Madam Chair.
I would like to announce that I intend to adjourn this hearing shortly after votes are called on the floor. That will likely occur around 1:15 today. The gentlewoman from Ohio, Mrs. Beatty, who is also the chair for the Subcommittee on Diversity and Inclusion, is recognized for 5 minutes.
Madam Chairwoman, I need a 5-minute biological break.
You are excused for 5 minutes. We will recess for 5 minutes.
He did that because of me.
Committee will come to order. The gentlewoman from Ohio, Mrs. Beatty, is also the chair for the Subcommittee on Diversity and Inclusion, is recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Ranking Member, and thank you to the 3 witnesses today. Madam Chairwoman, let me start by saying I don't know why any of my colleagues on the other side of the aisle or any of our witnesses or panelists here today are shocked by the title of this hearing. First, let me say, if I could, affordable housing advocates have broadly criticized your plans to overhaul the housing finance system, especially the proposal to get rid of affordable housing. Also, if I look at the statements that you have made, starting with you, Mr. Director, too many Americans lack what each of us deserve, an affordable place to call home, whether it's rented or owned. The national problem that exists in communities across the country, affordable housing. You then further say our housing finance system is supposed to serve homeowners and renters while protecting taxpayers. Currently, it fails on both counts. So this administration says the plan will not raise cost of home ownership or decrease access, but affordable housing experts disagree with that. Secretary Carson, you said far too many Americans who seek reasonable price rental units or sustainable home ownership still cannot get their foot in the door. You further say many of our nurses, construction workers, police, et cetera, simply can't afford to live around the communities they serve. So you'll have to forgive me for taking the side of affordable housing advocates and experts over the words of this administration, who has continuously asked to slash the budget of affordable housing by more than almost 20% every year since coming into office. So, Mr. Secretary, Mr. Carson, when the 3 of you were on the panel in the Senate, you stated that you do not believe these plans will increase costs of home ownership or decrease access to mortgage credit. I can't accept this belief because, as I've said before, I have dozens of organizations who've called my office saying this will do the exact opposite of what you believe and will actually raise costs of home ownership and make it more difficult for credit-worthy borrowers to unlock the American dream of home ownership. So what analytical data do you have, Secretary Carson? What studies, cost-benefit analysis to back up these beliefs? And have you ran any other kind of empirical analysis on the impact of U.S. mortgage market and the U.S. consumer based on the reports?
Which specific aspect are you talking about? Which studies are you looking for?
In the studies that you all presented to the U.S. Senate, there was documents in response to President Trump about your housing proposed plan.
Well, I can tell you that the proposals that we are advocating for are to increase the ability, particularly of underserved communities, to be able to have housing. And, you know...
And let me reclaim my time. I guess what I want to say, not your beliefs or not what you feel. What did you base it on? Empirical data, analysis? So talk to me in a way that this is why we're doing it, because this is what the reports, this is what the data shows. Well, it's the same thing that the people who are saying the opposite. They come into my district, my office, and they give me data showing that we have a real problem here.
We do have a problem.
Thus the reason for the title.
National Association of Home Builders, for instance, has data demonstrating that the cost of a single-family house, a new one, 25 to 27% increase.
So let me ask you this only because, and I want others to jump in. The Federal Housing Administration is responsible, as you probably know or should know, for nearly half of all the mortgages accessed by African Americans and Hispanics. Are you recommending moving forward with plans to overhaul this agency and its functions without empirical data?
We have plenty of empirical data. We're happy to supply that to you, but the point being, one of the reasons that there's a big wealth gap is because of housing. And we are
So
looking.
do you have a plan that you can submit to me, because my time is going to go up? Or let me ask you a last question. Is this plan calling for GSEs to get out of the business of low down payment loans? Yes or no, all three of you, quickly.
We are.
Yes or no? Just yes or no. My time's clicking. Come on.
I can't answer it yes or no.
How about you, Mr. Secretary Mnuchin?
That's a decision of the director. I don't supervise.
And he refuses to answer or doesn't have an answer. Thank you. I'm sorry, my time is up.
The gentleman from Ohio, Mr. Stivers, is recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you for holding this hearing. We are, as I said in my opening statement, 11 years into the conservatorship of Fannie Mae and Freddie Mac. We've seen reform proposals from the House, from the Senate, from Republicans, and from Democrats, and I think it's time that we try to do some bipartisan work together. I want to ask the witnesses a few questions. Have all of you had a chance to see Chairwoman Waters' housing finance reform principles? A couple of you have commented that you already support them.
Yes, we do support them.
So you were the only one who hadn't said, Mr. Secretary, so thank you. So all three of you, can you just affirmatively tell me that you actually are okay with the principles that the chair has put out?
Very much so.
Yes.
Thank you. So all three of you have said you're okay with the principles that the chair has put out. And again, from your written testimony and what I've seen of your previous comments, do all three of you prefer a congressionally worked out bipartisan housing finance reform proposal to administrative action?
That is correct.
Can you all three comment?
Yes. Obviously, as I said earlier, if we have something that is worked out on a bipartisan basis.
That was my question, yes, bipartisan.
And since we agree on the basic principles, that should be possible if you take the politics out
That's
of
where
it.
I'm trying to go. Director Calabria?
Let me say yes, and also add, I don't envision myself doing anything administratively other than carrying out the law as it is written today.
Thank you, Director. So would the three of you and your teams be willing to work in a bipartisan working group on housing reform with Republicans and Democrats from this committee?
Absolutely.
Not only would we be willing, we want to, both across the House and the Senate, so we can get legislation to the President to sign.
Would be delighted to.
Thank you. So, in 2 minutes, we've established that, frankly, you all three agree with the principles that the chairwoman has laid out on housing finance reform. I also don't have any problem with the principles, and that you prefer congressional action, and that you're willing to work with us. I know that's going to make some of the skeptics around town feel like it's not true, but I think really we agree on more than we disagree on. We all want to look out for housing availability and affordability, and we all want to protect the taxpayers, whether that's Republicans or Democrats, regardless of where we're from. We bring our own unique perspectives based on the geography we represent and the people we represent and those economic and housing conditions. But I do believe that we can work together to make meaningful bipartisan reforms of our housing finance system, and this is the only piece that's left undone from the crisis. We have an obligation to the citizens of the United States to work in a bipartisan, bicameral process with the administration to actually try to come up with things. Like I said, I think the chairwoman's principles are acceptable to me. I'm willing to start there and work, and I would ask the chairwoman to please take this offering of trying to work together, and let's see if we can't do something, because it is time to make something happen. And not only are taxpayers on the hook right now, but we aren't doing everything we can do to make affordable housing work for people and take away the differences between populations. I know that there is in some minority communities, including the African American community, a lower percentage of home ownership than I want, than you want, and I think these witnesses want. So I think we can and should try to work together, and I am hopeful that we can, and I am going to roll up my sleeves as the ranking member on the Insurance and Housing Subcommittee. I know there's a lot more in the name, but let's focus on the housing piece. And let's try to make something happen. And I want to work with the three of you and your teams and the chair and Republicans and Democrats. And I appreciate you being here today. I know there are sometimes tough questions, but I know you, the three of you, believe in making the housing system and the housing finance system in the United States the best in the world, the most affordable and available in the world for the American dream. And I want to work with you and the members of this committee, Republicans and Democrats, to make that happen. Thank you for your commitment, and thank you for your willingness to do that. I yield back the balance of my time.
Thank you. The gentleman yields back. The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Oops, lost my glasses. Welcome, and again, thank you very much, Madam Chairwoman, for this hearing. I do want to, again, thank the General for his words there. I think that they were very appropriate. Thank you. I do have to say that we do have a little bit of short memories around here. I do recall to the ranking member, it might be instructive if we go back and take a look at the record of some of the comments that were made in the previous years about the director of the CFPB from your side of the aisle, and to take a look at the words that were said and just to make it even on both sides. I think that would be
And if the gentleman will yield, that is a fair analysis, and fair and level-headed analysis, something we all should note, including me. And I thank you for raising that.
Thank you. Then I would like to ask, talking about both sides, you know, it's interesting. I get to walk a lot of precincts, talk to a lot of people, and the American dream is still the same. You know, most people want a safe place for themselves, for their family. They want their kids to do a little bit better than they did, and most people want to own a home. I think that's changing in California, the type of home, not a single-family detached home, but now attached product, especially millennials. They're looking at different types of living arrangements, and I think that's all very appropriate, but it's still the same. They want a place of their own. And they also don't understand when things get a little rough and tough, you know, in the economy, why it is that if they have a hard time paying for their home, why they don't get bailed out and why the big banks do. You know, why don't they get the help that others got? And they don't think that that's fair. And to that point, I'm not confident that the administrative changes that you want to make here are fair. Director, I do want to ask you directly this, if I could read it, and if you could comment about it. You talked a little bit about it already, but this is with regard to your appearance on CNBC. You mentioned the company's common shareholders as the GSEs, and a part of the discussion now underway, a comment that took place, well, they were surprised, I guess, what you said. And this is what I'd like you to comment on. Calabria's comments, I would say Director Calabria, Director Calabria's comments on CNBC on the sidelines of a major industry gathering were somewhat rushed as he tried to explain the nuances behind the notion of public offering for companies that already have shares outstanding. Holders of the common shares were never wiped out, he said. Whether we can do some kind of conversion with preferreds or whether they would get par, it's way too early to figure that out. As a reminder, the plan that rushed Fannie and Freddie into conservatorship as the financial system melted down in 2008 and subsequent amendments gave the Treasury Department warrants representing about 8% of each enterprise payable as senior preferred shares. In other words, they're concerned about who's going to get bailed out once again. And that is my concern, too. Could you comment on that? And I'll give you some time to comment on that.
Thank you, Congressman. Let me very strongly, forcefully say, I agree with you. None of this is unfair. I would have preferred to have inherited a fair situation when I walked in the door. I inherited a mess. My responsibility under the statute is to fix Fannie and Freddie. You have two options in conservatorship. You either fix them, get them out, or you take them in the receivership. The option of endless limbo is not an option under the statute. So I would prefer that I had a fair situation to enforce. I believe Fannie and Freddie got bailed out and homeowners did not. That pisses me off to this day. Just it does, and I'm mad at all the other bailouts. And I'm committing to you today that my number one objective is to see that we never, ever have to bail Fannie and Freddie out again.
Well, I would also caution, though, that Freddie and Fannie, the GSEs, have allowed many people to own homes that would not have had homes before. I mean, if you look around the world, the 30-year mortgage with the fairly low down payment is what has allowed a lot of Americans to own homes. And it's not around the world. Every country doesn't have it. In fact, it's very unique almost to our country. And I hope we don't destroy that in the process. I do want to give the secretaries an opportunity to comment on that if they wish.
First of all, you have my commitment. I've been around the housing market for 35 years, and I can assure you I very much support the 30-year market and want to make sure we do this. But I would also just comment on your previous issue. We have made no decision as to whether they would exit by conservatorship or receivership. And I would just comment that I represent the largest creditor, which is the U.S. government, and we would need to be part of any decision. So again, we're focused on how to make them safe and sound and recapitalize them, and then we can figure out the process of raising exterior capital.
I, too, am very much against the whole bailout issue and the too big to fail issue, which is why a lot of this revision is being done, but also recognize the importance of the American dream and people wanting to be able to hold on.
Thank you. Thank you.
The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Thank you, Madam Chairwoman. And the title of today's hearing is revealing. The title is The End of Affordable Housing, a review of the Trump administration's plans to change housing finance in America. Well, this suggests that my friends on the other side of the aisle believe that any effort by the administration to reform housing finance will increase housing prices and disadvantage low and middle income borrowers. In reality, the proposals set forth by the administration lay the groundwork to protect taxpayers, retain the 30-year mortgage, improve efficiencies in the mortgage market, and lower prices for qualified borrowers. By pushing back against common sense reforms to housing finance, the Democrats are endangering the very low and middle income citizens they claim they want to protect. Unreformed GSEs will lure Americans to buy homes beyond their means and then default with foreclosure as the result. That's not helping low-income Americans at all. We've seen this train wreck before. Democrats' opposition to meaningful housing finance reform will take us right back to where we were prior to the financial crisis. For years, the government's policy was to drive up mortgage indebtedness above what the market could naturally sustain. For example, let's rewind the tape. Back in 2003, this committee held a hearing on ways to improve regulatory oversight of the GSEs. And during that hearing, then-ranking member Barney Frank said this: "I think it's clear that Fannie and Freddie are sufficiently secure so they are in no great danger." He continued, quote, "Fannie Mae and Freddie Mac do very good work, and they are not endangering the fiscal health of this country," unquote. Well, how wrong he was. Let's not let this conversation about housing finance reform end the same way. It is alarming that the enterprise's shares of low down payment and high debt-to-income mortgages are now higher than before the financial crisis. But I would suggest that what is even more alarming is that the Democrat majority today is defending this state of affairs. Winston Churchill said, "Those who fail to learn from history are condemned to repeat it." The administration's proposals seek to place our housing finance system on a stable, sustainable path and protect us from another housing crisis, and I applaud our panel for their leadership. Now, my first question I want to ask, it relates to the credit risk transfer issue to Secretary Mnuchin. The Treasury report calls on the GSEs to continue to engage in a diverse mix of economically sensible credit risk transfers, including by increasing reliance on institution-level capital. Unfortunately, current capital rules hinder banks' willingness to take on more credit risk from the GSEs. Bank capital rules based on Basel III's simplified structured finance approach are grossly misaligned with GSE credit risk. The SSFA was intended to cover all lending, including unsecured debt, as Basel III was trying to make sure that banks are not making unsecured subprime loans. However, the enterprises make secured prime loans, and thus capital charges can be as high as 5 times what banks expect to lose in the worst of recessions. With capital charges like that, it does not often make economic sense for banks to take on more risk from the GSEs despite their desire to do so. Secretary Mnuchin, do you agree that international capital rules adversely affect our private banks' willingness to take on credit risk from the GSEs, and will you commit to working with the bank regulators on FSOC to explore ways to better tailor capital rules so that the private sector may assume more credit risk from the taxpayers?
Yes and yes.
Thank you. Secretary Carson, PMI. Private mortgage insurance can help borrowers with small down payments and help them prudently get into houses and stay there without putting the taxpayers at risk. What role does your plan contemplate shifting some of the risk from the FHA to private mortgage insurers?
Well, we very much want private mortgage insurers to become a significant part, particularly after the GSEs exit conservatorship. And, particularly in smaller communities and in rural communities, they can play a very substantial role. And we're looking at ways to make it even easier for them.
Well, I appreciate that. I think PMI is a good solution for both affordability and for protecting the taxpayer. Finally, Director Calabria, private label securitization. What is the, in your mind, the ideal proportion of mortgages held by GSEs and FHA versus portfolio lending and private label?
Well, I do think we need to see more diverse sources of capital. At least when I studied economics, I learned that duopolies and monopolies were not good for consumers, and I think bringing more competition to this is critical. So I don't want to say an exact percentage, but I think there needs to be a wide range of sources of capital.
I think level the playing field on regulations to encourage more portfolio lending and more private securitization is the right way to go, and I applaud you for moving in that direction.
Absolutely.
I yield back.
Thank you. The gentleman from Florida, Mr. Lawson, is recognized for 5 minutes.
Thank you, Madam Chair, and welcome to the committee today. And Secretary Carson, this question goes to you, and you probably understand what I'm going to say. You had the opportunity to visit in my district with the housing condition that exists, especially in the Jacksonville area. But my concern has been one of the things that we talked about then, and I subsequently filed a bill for setting up housing IRAs for our young people, deferred IRAs so that they could save in those IRAs on a tax-deductible basis until they accumulate enough capital, which can be capped maybe at $20,000 or more, so they can use those funds for a down payment. And the reason why I talk about it and have you to elaborate on it is so many of the young people today sometimes don't see buying a home as an option, and I live in an area where a lot of them up here, where a lot of them rent, and get a chance to talk to them. They don't see how they're going to get ahead with student loans and other things that are pressing on them coming out of school. So what are your opinion on these deferred IRAs for down payments only, except in emergency situations, but to be used for a down payment on homes?
Well, thank you for your interest in that. That happens to be a great interest of mine as well. I think we need to entertain all the ideals. It's one of the reasons that we're really pushing, the self-sufficiency programs where people can accumulate money and not be penalized in terms of their rent going up. And then that can go into an escrow, and that can be used for down payment or other things of that nature. IRAs, whatever mechanism that we can use is very much appreciated because, as you know, home ownership is the principal mechanism of wealth accumulation in this country. And one of the reasons that the wealth gap has deteriorated significantly is because a lot of people, particularly in the minority community and particularly in the African American community, had their credit ruined. And as a result of that, you see the home ownership rate decrease. We're looking at ways to ameliorate that situation.
And I will see if the director wanted to comment on that.
I absolutely agree. Before, I guess I should say, in between some of my stints in government, did some work with the Consumer Federation of America's America Saves initiative, and I'm a very big believer. I would say I think it'd be appropriate if there were another round of tax reform at some point, having a universal savings account, I think could be very helpful in terms of helping particularly low-income households save.
Okay, and I look forward to continuing to work with you as this legislation is being developed. And with that, Madam Chair, I yield back.
Thank you. The gentleman from Colorado, Mr. Tipton, is recognized for 5 minutes.
Thank you, Madam Chair. I'd like to be able to speak somewhat to the issue of the GSE's portfolios and the guaranteed businesses while they've been in conservatorship. Do appreciate the comments made by my colleague, Mr. Scott, in regards to the passage of Dodd-Frank, where prior to it, we'd had loans that had been made with no documentation or loans with riskier product features such as negative amortization. And Director Calabria, could you maybe speak, how can we ensure that the GSEs continue to be able to avoid such products moving forward as Fannie Mae, Freddie Mac exit from conservatorship?
Well, first, I think it's important to make sure that GSE borrowers enjoy the same consumer protections that other borrowers have, and so that therefore we allow the QM patch to expire and replace it with a set of consumer protections that works for all borrowers. So that's the most critical. Foremost, making sure there's the capital there to support the risk. Obviously, all financial institutions, including the GSEs, exist to take some degree of risk. The real question is having the capital there to support that risk so that they can engage in increasing opportunities, but also trying to make sure that we have better procedures in place and making sure that the underwriting is there and making sure the products don't come back and making sure that the safety and soundness is there.
So that speaks a little bit to what you spoke about during your testimony on the 500-to-1 leverage ratio.
Yeah, let me emphasize, even if every single loan that Fannie and Freddie made were pristine, they would still fail at that amount of leverage.
Great. Thank you for that. You know, the ability of the customer to be able to repay speaks really to the health of our financial system, and we need to be able to make sure that the borrowers are taking on only what they can handle in terms of payments. And Secretary Carson, you'd mentioned about the loan insurance, to be able to have that as well. But when we're talking about your predecessor, Director Mel Watt, he'd made some fairly risky programs during his tenure while he was in office. How would the administration's proposal make the GSEs more risk averse, and also how would it preserve the risk aversion priorities currently in place over the long term?
So let me emphasize that I believe that any reduction in the footprint can be quite modest, where we are dealing with, it's the true with any sort of insurance program where it's the tail of the distribution. And quite frankly, the sort of any sort of reduction of risk would really be loans we don't want to get families into, particularly at this point in the cycle. I think it's important to keep in mind this has been a long housing recovery. I think the vast majority of house price appreciation is behind us. And what we really need to be able to focus on is how do we prepare families, how do we prepare Fannie and Freddie, how do we prepare the economy for a potential turn in the housing market?
Great. Secretary Carson, Secretary Mnuchin, do you have anything to add to that?
Agreement.
Okay, thanks. You know, we have a lot of voices in the industry right now and across the aisle that are questioning the timing of the administration's proposal. And Director, you just noted that right now in terms of the current default rates, it's 0.67, 0.61. We've got a pretty healthy economy right now. These are doing good times. So why is the administration's proposal needed now?
If I can paraphrase President Kennedy, the time to repair the roof is when the sun is shining. And right now our housing market and our economy is strong. This is the time to do it. I fear that if we don't do it now, we will not be able to make these reforms in a time of stress.
Great. Do you have any comment on that, Mr.
No, I totally agree. I mean, when is a better time to fix it than when things are good? Absolutely.
Well, I appreciate the comments, and I appreciate the administration's position in terms of trying to be able to reform Fannie Mae, Freddie Mac. Some paths are simply not sustainable. I think every individual, we want people to be able to have a home, but we also need to be able to make sure that we aren't putting people in homes that they cannot afford, to make sure that we've got a sustainable system when we're talking about being able to build that wealth. And that the primary residence is obviously the biggest wealth that most people are able to accumulate in their lifetime. It's important that we have a system that's not going to be punitive, is not going to put people into a position to where they will lose those dollars in the event of ultimately what will happen in business cycles. We will see economic downturns. They will come. And I wholeheartedly agree, let's fix the roof while the sun is shining. I applaud the administration's proposals to be able to try and address this, and appreciate you gentlemen being here today. I yield back.
Thank you. The gentlewoman from Michigan, Ms. Tlaib, is recognized for 5 minutes.
Thank you, Madam Chair. An investigation in Metro Detroit found that about 40% of people in protected classes experience unlawful differences in treatment by housing providers. This unlawful discrimination is usually hidden. It's not like we're going to find signs that are posted on doors of homes that say no, don't rent to Black families, or no Muslim families, or no LGBTQ families allowed. And so, yes or no, Secretary Carson, do you believe that landlords or property owners or housing providers anywhere in the United States have ever engaged in discriminatory practices against protected groups?
Of course they have, and we strongly oppose that.
Yes or no, Secretary Carson, do you believe that there should be some level of protection to prevent or stop discrimination that is rarely explicit nowadays?
Of course there should be.
So, Secretary Carson, under your leadership, HUD proposed a rule to make substantial changes to disparate impact standards under the Fair Housing Act. The rule would make it harder for families facing housing discrimination to seek justice by shifting the burden of proof onto them. Can you explain why the agency charged with enforcing the Fair Housing Act is proposing to make it more difficult for plaintiffs to bring forward housing discrimination claims under the disparate impact standard?
I can probably explain it best by giving you an example. If Congress decided that they wanted to raise the minimum wage to $15 an hour, the people who would be most impacted would be low-skilled individuals. And a lot of those low-skilled individuals would be in the minority classes, and therefore they could bring a disparate impact suit. We want to make sure that obvious cases of discrimination can still be addressed appropriately. And in cases where something is not obvious, we want to apply logic and common sense to it. Otherwise, everything could become a disparate impact case.
No, but the burden proof would be so much. I mean, the complete intention is to show that the impact of the act or the structure that's in place that's discriminatory against the families, like the disparate impact, helps with going after those that are going to hide that discrimination. Again, Secretary Carson, it's not like they're putting signs up anymore. It's not like we're going to find emails. I mean, sometimes we do. But disparate impact allows people access to that justice to show housing discrimination. So the example, I'm disagreeing with your example in that you're showing that it's, because most of the claims that are coming forward are, we still have a huge burden to show that kind of disparate impact. It's not as easy as it claims. I've had a number of clients and residents that come forward, and we've lost more Black home ownership in Michigan than any other state. We've seen actual shifting of home ownership away from communities that are struggling, and we do believe it stemmed around a lot of housing discrimination, and there should be equal access to bring those claims forward. So I just strongly disagree with kind of the analysis that you bring forward, and really advise your department to push back against getting rid of disparate impact. I mean, almost making it impossible, Secretary Carson, impossible to bring a housing discrimination claim. But Director Calabria, we know that a quarter of the mortgages provided by government-sponsored enterprises must be allocated to low-income borrowers. Right. As I know has been discussed, the Treasury Department claimed that in order to protect taxpayers and making housing more affordable, federal housing financing authorities should bring in private lenders to foster competition in the financial system. Anytime, Director, fostering competition is being brought up or used, it results in enterprises getting richer at the expense of ordinary people. Director Calabria, will these private lenders also have an obligation to make a quarter of the mortgages they back to low-income borrowers?
So all of the private lenders who originate mortgages and therefore sell them to the GSEs are indirectly impacted by the housing goals, because the loans that are bought have to meet the housing goals. So again, let's say you're a lender who sold 100% of your loans to Fannie or Freddie, you would on average be meeting those housing goals. So again, indirectly it impacts the originators and servicers who deal with Fannie and Freddie.
And so what my residents would ask you is about accountability. How do we make sure? So how can we make sure that these private market participants are beholden to the American home buyers rather than shareholder profits?
I think that's a great question. We hold the counterparty, so I have no ability to regulate the counterparties to Fannie and Freddie. I regulate directly Fannie and Freddie. And so our accountability is making sure that when Fannie and Freddie meet those goals, they can only meet those goals by having the entities that they buy from essentially, on average, meet those goals.
And just lastly, Director, just always remember you're also creating the structure. So even if you don't, you're creating a structure that allows it. So just be cautious as you
Appreciate that.
proceed.
Thank you.
Thank you so much, Chairwoman.
The gentleman from Texas, Mr. Williams, is recognized for 5 minutes.
Well, I thank all of you for coming here today, and I know I've asked both the secretaries the question when they've been here in the past, but this is the first time I've had the opportunity to ask the third panelist, Director Calabria, are you a capitalist or are you a socialist?
I'm a pretty ardent capitalist.
Thank you for that. I look forward to working with all of you and to working with over the next few years as a partner in the housing finance reform. There is a problem, however, with the affordable housing in this country, but it isn't because of any of the recommendations laid out in these last two reports. It's a direct result of excessive state and local regulations, land use restrictions, outdated zoning laws, and parking mandates are just a few things that increase the cost of developing new affordable housing units and have prevented supply from meeting demand. So, Secretary Carson, regardless of what is done administratively to the housing finance system, will it make a difference to the affordable housing stock if state and local governments do not address this root cause of this issue?
No, in order to be effective, it's going to require a combination of federal, state, and local jurisdictions. And a lot of the problems, obviously, are local regulations. 80% of the regulations are local in nature, and many of them are archaic. Instead of people replacing one regulation with another when they come up with something better, they just layer it on top. And we become a very complex labyrinth to get from point A to point B. And each one of those arms of that labyrinth is an expense, and as well as creating more time lapse.
GSEs are in a worse financial state now than they were before the financial crisis. Even after the GSEs retain $45 billion in earning over the next 18 months, they will still be drastically undercapitalized, as we've heard, for their $5.5 trillion in assets. So, Secretary Mnuchin, what do you believe is the appropriate capital standard for the GSEs, and do you think that they will be able to raise the amount of capital from the private sector?
Well, in regards to the first issue, again, I deferred to the director's analysis before we comment on it, but I do believe that the GSEs can raise a very significant amount of capital from the private sector. So we do anticipate the combination of retention and third-party capital raise, there will be sufficient capital to get to the new standards.
Good, okay. The GSEs clearly have significant market advantages because of their congressional charters and other statutory privileges. There have also been several things that GSEs have done while in conservatorship that have further increased their competitive advantage over private sector participants. And you briefly touched on this earlier, Director, but as we move forward in this process, can we elaborate on how the administration plans to level the playing field so that potential market entrants can fairly compete with Fannie and Freddie in a reformed housing finance system?
Thank you, Congressman. I think this is critical. I want Fannie and Freddie to be successful and effective, but I want them to be successful and effective because of good management, good business practices, not because they're held to lower standards than everybody else. I mentioned earlier for the qualified mortgage rule, I believe CFPB is making significant progress on that, and I believe that was mentioned in the Treasury report as well. I've had a number of conversations with other regulators. I've talked to the SEC about reforming Reg AB, talked to the bank regulators about trying to get some relief. We've really seen difficulty in making bank portfolio loans, particularly for community banks, so I think additional community bank relief is critical to being able to get the mortgage market to move again. So all this coordination is a number of things that we're working on.
Good. One last question, Director. You have stated that one of the critical changes needed prior to the end of the conservatorship is strengthening the powers of the regulator. What changes are needed to the FHFA to ensure it is equipped to be a regulator in a post-conservatorship world?
So one of the powers I've asked for, I know that it's being discussed within the committee, is we all remember, especially post-Cap 1, the transition to the cloud. So the Federal Reserve and other bank regulators have significant authority under the Bank Services Act to go in and look at service providers. Fannie and Freddie are transitioning into the cloud. Having all of that mortgage data in one space is very concerning to me. I have no authority to go in and do the same thing that the Federal Reserve and others can do to make sure that the cybersecurity threats that may threaten Fannie and Freddie are not severe. So that's one. I would like chartering authority, like every other regulator. I think it's important to bring competition to the marketplace, and I'd like greater discretion. You know, if you want to know what I would like under capital standards, simply look at Section 38 of the Federal Deposit Insurance Act. If you could give me that, I would be delighted.
Good. Well, competition is good.
Absolutely.
And none of you have touched on this, but I will go ahead and do it, and I'll say Astros in 6. Madam Chairman, I yield back.
Thank you. The gentleman from Illinois, Mr. Carson, is recognized for 5 minutes.
Thank you, Madam Chair. Secretary Mnuchin, I'd like to turn to Rusal, an aluminum company largely owned by Russian oligarch Oleg Deripaska. As you know, in April 2018, the Treasury Department sanctioned Deripaska and Rusal as part of a targeted strategy against oligarchs believed to be close to Putin and were designed to punish him for subverting Western democracies. The Treasury Department lifted those sanctions in December 2018. Mr. Deripaska, as you know, was detailed in the Mueller report to have financial dealings with Paul Manafort, who is now in jail. Earlier this year, the Associated Press reported that Manafort began collecting $10 million a year in 2006 from Deripaska to advance Putin's interest in Western governments. In June 20th of 2016, Mr. Manafort was named Trump's campaign chair. Less than 2 weeks later, on June 7th, he asked an overseas intermediary to pass the following message along to Deripaska, quote, "If he needs private briefings, tell him we can accommodate." 2.5 years later, sanctions were lifted, and shortly after that, Rusal announced it was investing $200 million into a project in Kentucky. In April this year, you testified in this committee that you delisted those sanctions against Rusal because, this is your quote, "The company approached us, not the oligarch. The company approached us, a large group of people," unquote. Was Senator McConnell among the people who approached you?
I'm not really sure what this has to do with housing reform, but
Sir,
I'm
the trust in our financial system depends on the entire system.
Again, I'm happy to answer.
Okay.
I don't see the relevance to housing reform, but no, I've never spoken to Mitch McConnell about that, other than when we briefed the entire Senate, Republicans and
prior to lifting the
others
sanctions.
on the sanctions.
Did Secretary Chow approach you to lift those sanctions?
No, he did not.
Did any member of Congress, House or Senate approach you with respect to lifting those sanctions?
Not that I can recall, but we had extensive discussions with many people on what we would be doing about lifting the sanctions.
Did Craig Brouchard of Brady Industries approach you about lifting those sanctions?
I'm not even sure I'm aware of who that is, so no.
Brady Industries is the company that is a substantial beneficiary of that investment in Kentucky.
Like I said, I'm not aware of who that is.
Did anyone associated with Brady Industries approach you about lifting those sanctions?
Again, as I've testified before, we lifted these sanctions because
Okay, just a yes or no is fine. I'm just asking whether you understand. Now, I get to that because of the news from this last week. Last week, it was reported that in December of 2018, largely contemporaneous with your decision to lift sanctions, there was a seizure of documents from Terrace Services Ltd. This was a London-based company owned by Mr. Deripaska, real estate firm that he controlled. As that raid has been described, or that raid was described as being, quote, "in connection with the special counsel investigation," that of course being the one led by Mr. Mueller. This raid is substantially contemporaneous with the Treasury Department's lifting of sanctions, and you appreciate, I'm sure, how bad this all looks. So the question is, did you have any knowledge of the raid or the preparation for the raid at the time you were making a decision to lift those sanctions?
Again, I find it interesting when we're here to discuss housing reform that you're trying to grill me on something that happened months ago.
Sir, I would reiterate, sir, that if you could isolate risk in the financial sector, Lehman Brothers would still be here today. I'm concerned about whether or not people trust that the Treasury Department is acting in the best interest. Yes or no, did you have knowledge of the raid or the preparation for the raid at the time you decided to lift sanctions?
No, I had no basis of knowing the raid or involvement with the special counsel.
And in any of the answers that you've given me, can I assume that your lack of knowledge can be applied to the entire Treasury Department? Were there people in the Treasury Department who you believe would have had knowledge?
Of course you can't assume that. I'm not making representations for what's obviously 1,000 people within the Treasury Department. Again,
one final question.
Concerns, we're happy to discuss them with you at the appropriate time.
Okay, so one final question, and I appreciate your willingness to share. Will you commit here today to ensure that the employees of the Treasury Department under your control will comply with any congressional subpoenas relating to these matters?
What I will assure you is that we will follow the law as reviewed by our general counsel. So I think, as you know, we've already received subpoenas that we did not think were legal. And again, I will refer them to my general counsel, and they will be reviewed. But I can assure you we will always follow the law. That is our intent.
Let's hope so. I yield back.
The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes.
Thank you, Chairwoman Waters. Appreciate Secretary Mnuchin, Secretary Carson, Director Calabria for being here today. Very important topic. Appreciate you reprising your presentation to the Senate. You can tell all the interest that we have on this topic in the committee. About a year ago, I wrote an op-ed about how Fannie and Freddie have been violating, this is my view, violating their charters, misleading Congress, misleading investors dating back to the 1980s. So I'm always very suspicious of reform ideas since the 80s, the 90s, and the 2000s really have not delivered very successfully on those. The agencies have ventured into new activities and product offerings, including, but not limited to, mortgage insurance, lines of credits to non-bank and mortgage servicing rights. These concerns have raised questions regarding the proper role in the overall housing market, which we've talked about today. Additionally, the GSEs continue to grow their footprint by increasing the loan limits, allowing mortgage subsidies for second homes, and increasing caps for multifamily lending. Director Calabria, as you look at this issue now that you're our head of the regulatory body, how are you going to ensure that the GSEs stay within their charters?
Thank you, Congressman. Let me emphasize, I think this is always a critical concern. Anytime a player in the marketplace has considerable market power, they try to leverage that into other lines, and I think that that's something we always have to be cautious of. I mean, Fannie and Freddie have the ability to essentially put anybody out of business that they could directly compete with. So it's certainly a very large concern of mine. The Housing Economic Recovery Act in 2008 set up a new structure for product approval. This was a big concern going into the crisis, and we will be doing a rulemaking. I am disappointed that we're 11 years later, and there has not been an established rulemaking on this before I got there, but we will be setting up a rulemaking to have a very clear process to make sure that GSEs
Well, I thank you
stay
for
within
that.
the charters.
I think you should echo former OMB Director Mitch Daniels, former governor of Indiana's admonition that if it's in the yellow pages, it doesn't need to be done by the government. So I urge you to be very disciplined in looking at that process. You reference in your testimony on page 3 that your job is to remove the GSEs from conservatorship by reorganization, rehabilitation, or winding up their affairs. I take it from the Treasury report and the HUD report that there's this bias towards recapping and releasing. Those are my words, not your words. But it gives the appearance that the implication by what's been said is that we're going to release these entities. They're going to raise capital with a reduction in the sweep, renegotiate the preferred stock arrangement, and then they're going back out to the marketplace. Director Calabria, do you support recapping and releasing Fannie Mae and Freddie Mac?
I do not support putting them back out there simply the way they were before the crisis. I will say I very much share Secretary Mnuchin's earlier point that no decision has been made yet on moving forward. I do believe that I have a responsibility in the interim to help build capital at these enterprises.
Secretary Mnuchin, would you like to comment, please?
Yeah, I would just say I think your characterization of a bias, I don't agree with that. I think, as I've testified earlier, we have the option to take them out through conservatorship, or we have the option to go through receivership. We have not had any discussion, and my sense is what we do agree on is they need more capital, and we would hire appropriate advisors to determine what's in the best interest of the taxpayer.
Good, and so you're open-minded about these various models of substitution that might be proposed? In other words, we have proposals to have a mutual that's a utility, a nonprofit that's a utility, a government that's a utility, or we have the recap and release with competition, where the Director Calabria has congressional authority to charter new entities. All these are, you're open to considering all these options?
Again, I would say that our number one objective is to make sure we meet the housing goals that if they've been outlaid and to protect the taxpayers. And we'll look at whatever the best alternative is for that.
Thank you, Mr. Secretary. Secretary Carson, earlier this year, when you testified, I recommended that FHA Commissioner Brian Montgomery testify before a committee, and I still hope that our chair will encourage the FHA Commissioner to come and discuss FHA's book of business. I'm concerned it's deteriorated in loan quality over the last couple of years, that FICO scores are lower, that debt-to-income ratios are higher, and that's concerning to me. And also, Director Calabria has mentioned the GSEs competing with FHA for the same first-time homebuyer market. So, Dr. Carson, do you agree that the GSEs should not compete with the FHA first-time homebuyer market in the secondary market?
Well, I think the GSEs have a different mission target than FHA does. And can they both, work within that sphere? Of course they can, but I think one is more specialized. It's sort of like a cardiac surgeon and a urologist. They both can probably operate on your heart, but I think you'd probably rather have the cardiac surgeon.
Thank you. We'll put you down as an expert witness on that. I yield back.
The gentlewoman from Virginia, Mrs. Wexton, is recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you to, I'm over here, all the way on the right. Hi. And thank you to the distinguished gentleman for coming to talk to us today about this important topic. Secretary Carson, FHA currently charges a flat fee for mortgages that it backs, but your plan for housing finance reform recommends a risk-based pricing structure for FHA loans. Advocates have expressed concerns that this could fundamentally undermine FHA's mission to serve underserved borrowers by charging them higher premiums to those who can least afford them. Has HUD evaluated the effects of risk-based pricing on borrowers throughout the credit spectrum? Specifically, what would the effect of tiered pricing be on the least wealthy Americans whose credit scores are below 650?
Yeah, this has been a subject of great conversation. We have looked at the different scenarios. We feel that if we just have a one-size-fits-all model, it has a tendency to attract the higher risk people into that pool, and in the long run could actually elevate the costs for the low-income individuals.
So by your, you didn't answer this question, but would the premium or would the fee be higher for higher risk individuals and lower for lower risk individuals?
Yes.
So has HUD conducted a fair housing analysis to determine if protected classes of borrowers would be disproportionately impacted by this new policy?
Well, protected classes would also undergo the same type of credit risk analysis and would have the fees appropriately scheduled for them.
So are you saying that the fees, whether or not they're a protected class?
No, whether you're a protected class or not.
So has HUD conducted a fair housing analysis to determine what the impact of this would be?
It would be happy to send that information to you.
So did HUD conduct such an analysis?
Of course, we have looked at the various scenarios, and we have that information.
Okay, and is the information that protected classes are disproportionately impacted by these risk-based fees?
No, they are not.
Okay, well, if you would share that analysis, that would be fantastic. Thank you.
Absolutely.
Also, Secretary Carson, HUD's plan for housing finance reform recommends that Congress establish FHA, VA, and USDA as the sole source of low down payment financing for borrowers not served by the conventional mortgage market. Are you recommending that Fannie and Freddie get out of the business of backing low down payment loans?
I think it would be good if we have segments of the housing finance market focus on particular mission targets.
So
does it mean that there won't be some overlap?
If FHA, VA, and USDA essentially have a monopoly on these low down payment loans, wouldn't that crowd out private sector participation in those loans?
The private sector could decide which segment of the population they want to specialize in. No one would try to tell them what they could or could not do.
And that would probably disproportionately impact some less creditworthy protected classes as well, would it not?
It depends. I mean, some people in the private mortgage insurance market might decide that they want to focus primarily on low-income, high-risk individuals, but that probably is not going to be financially the best move for them to make, but maybe they might feel some social obligation to do that. We wouldn't preclude them from doing that if they wanted to.
I have not found social obligation or social desires to be a big motivating factor among most of these for-profit corporations.
I think that's right.
Now, Secretary Carson, I see I only have about a minute left, so I wanted to give you a chance to apologize for comments you made during a meeting with HUD staff last month where you described transgender women as big, hairy men.
Well, first of all, I didn't describe transgender women that way. I was relating a story that a women's group told me about big, hairy men who are not transgender women, by the way, coming into their facility and having to be accepted because of the rules that were in place.
What was the women's group that told you this story?
It was a group from Alaska.
What was their name?
I don't remember.
Okay, could you get that for us, please? And so you don't feel the need to apologize for those comments?
No, I think, this whole concept of political correctness, you can say this, you can't say that, you can't repeat what someone said, is total foolishness, and it's going to destroy our nation, and we need to be more mature than that.
Very good. Thank you very much. I yield back.
The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes.
Thank you, Madam Chair. Thank all three of you for being here. Dr. Carson, Secretary Mnuchin, you guys have been here before. You're aware of the theatrics that go on here, and Director Calabria, I appreciate you being here. Sometimes I am amazed myself with what happens here. There's a popular television commercial out there about these young people who are in the middle of a horror show, and they have an opportunity to run away from this terrible incident they're in to jump in a running car, but they choose to go behind chainsaws instead and then run to a cemetery. I often relate that to Congress. It seems like when we find ourselves in the middle of a really bad situation, some of us look for the running car, others just keep wanting to run to the chainsaws to make the situation worse and worse. And I appreciate what you're trying to do with the reforms of the GSEs. You're looking for that running car. To me, the economy is that running car that we can jump in and use the strength and the power of this economy to make changes going forward. And the economy is strong. In my hometown of Bartow County, Georgia, we just posted in August the lowest unemployment rate in the history of that county. Give you an example, in 2010, unemployment was 12.2%. In August of 2018 was 3.8%. This year was 3.5%. We're seeing manufacturing return. However, we are seeing also some problems associated, good problems, but problems associated with a strong economy. One is the jobs that are made available. We just don't have skilled workers getting into those jobs. In fact, I held a skilled jobs fair at the beginning of this month where we brought employers in and we put the invitation out to every high school in our district. Every high school responded. Over 400 showed up to get matched with employers who will do apprenticeship. So we're addressing those. The other issue I'm hearing from employers that is a big problem is the lack of entry-level homes for their employees they're bringing in. And because in fact, my son-in-law and my daughter are looking for a home, and he said basically anything in that starter home level in our area of Georgia from $140,000 to $180,000 is sold by the time it hits the market, and it sells for more than the asking price of the home. And so we're trying to find some ways to address that. But what it's doing is it's pushing those new employees to either take long commutes from other communities because they can't find the affordable housing in our area, let me say entry-level housing, or they're moving into multifamily housing, which is creating a supply and demand issue there, which is causing apartment complexes and other multifamily homes prices to go up. So my question, and I appreciate, Dr. Calabria, the efforts to retain capital, because we do need to have that rainy day fund if and when we do get into the next financial crisis. I think that's good business decision. I think that's a good running car to be in. My concern is, and I know this rule was proposed by your predecessor, is if we make that a permanent rule after you're out of conservatorship and things are going again, and that's a permanent rule, is a requirement for multi-level family or multifamily dwellings to be double of that a single family. The concern I have is, could that actually further impact the availability of these homes that are really needed in our parts of the country?
Thank you for the question, Congressman. Certainly, we want to make sure fundamentally with a well-thought-out, strong capital rule that it means that Fannie and Freddie are there during stress times so that they can provide that credit. I'll remind the committee, if you go back and look, 2008, before they failed, 2009, 2010, Fannie and Freddie pulled back from the marketplace. They focused on saving themselves. And again, I think any for-profit enterprise would have largely done the same. So the question is, we need to make sure that they are strong going into a stressed environment so they can continue to be there. We certainly are not looking to penalize multifamily or single family relative to each other, but just to make sure that the risk-based capital standards reflect the relative risk. And fortunately, the multifamily portfolios at Fannie and Freddie largely came through the crisis well, much stronger underwriting there. But again, making sure that the risk and the capital there is balanced is where we're going.
If you look at that, I just want to make sure that by doubling the retainings from the multifamily, it doesn't create an imbalance there to further the crisis. One other quick question in the final seconds I have. There's been a prohibition against the GSEs lobbying while they're in conservatorship. I want to make sure that we continue that going forward. Will you support a ban on lobbying Congress by the GSEs?
I think it depends on how it's structured. Even Fannie and Freddie have First Amendment rights, so I just want to make sure that we respect those.
Okay, thank you. I yield back.
The gentlewoman from North Carolina, Mrs. Adams, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you, gentlemen, for being here today. First-time home buyers have traditionally been the driving force of the housing market, and these borrowers traditionally rely on low down payment mortgages to purchase their homes. In fact, over the past several years, nearly 80% of first-time home buyers with mortgages purchased homes using low down payment products. Director Calabria, can you please speak to how the FHFA will ensure that borrowers continue to have access to affordable, prudent, low down payment mortgage options?
We'll certainly continue to make sure that they are sustainable, that when we get people into homeownership, they are there to stay. And I do think that, of course, down payments are part of the question, as is DTI, FICO, borrower credit, a number of these factors. But we want to make sure that we get borrowers in to stay, and I commit to you that that's what we'll be trying to do.
Thank you for that commitment. And for each of you, if you could just answer yes or no, it would be helpful. Should the federal government play a role in ensuring access to affordable housing and affordable loans? Ms. Mnuchin?
Yes.
Thank you.
Yes.
Okay, great.
And of course, and we should do it in a responsible manner.
Okay. Does the GSEs play a role in ensuring access to affordable housing and affordable loans?
Yes.
Of course.
Yes.
Okay, great. Secretary Mnuchin, your plan for housing finance reform proposes to replace the current affordable housing goals with a fee that would fund affordable housing programs. And while you provide extensive details on other recommendations in your plan, you provide no details on the size of this fee or what kinds of affordable housing programs the fee would fund, or how you would expect this would be an adequate replacement for the affordable housing goals. It's clear that you're punting a little bit on key details of your plan when it comes to affordable housing, but affordable housing cannot be an afterthought in the debate on housing finance reform. It's got to be at the center. So can you please tell us why you have decided not to spell out key details of your own plan on affordable housing?
Well, thank you for that question. First, as I said in my opening testimony, because I wanted to clarify, we want to make sure that there is affordable housing. I think it's been misinterpreted that we're looking to replace the goals with a fee. That is one alternative that has been proposed. That's not necessarily our only alternative. What we are saying is that in the affordable housing goals, that we want to make sure they're accountable. We want to make sure that the community groups and the communities are getting the benefit of that. So it's really more about accountability, and we look forward to sitting down on a bipartisan basis and figuring out how we do not have less affordable housing. If anything, hopefully we could have more affordable housing and people better served.
So you do have some details then?
We have views, absolutely, but we would sit down on a bipartisan basis and want this resolved, because
All right.
it's not just Treasury.
Okay, thank you, so let me move on. Over the summer, the GSEs made several concerning changes to their affordable lending products, Fannie Mae's Home Ready and Freddie Mac's Home Possible. Previously, these programs had income limits of 100% of the area median income. Now, the income limits are 80%. Director Calabria, are you concerned that these changes will deprive consumers of mortgage options and potentially lock them out of the conventional market?
I think it's important that we make sure that Fannie and Freddie's affordable housing efforts are well targeted. So for instance, the statutory framework has affordable housing goals built on income. Most of the programs are targeted at credit, and of course, while credit history and income are positively correlated, they're actually only weakly so. So we're actually in a situation historically where higher credit, lower income borrowers have been cross-subsidizing worse credit, higher income borrowers. And so one of the things that we're trying to make sure is essentially make sure that the affordable housing products that provided are well targeted within the goals to low-income families.
Great, thank you very much. I yield back, Madam Chair.
Thank you. The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes.
Thank you, Madam Chairwoman. I thank our witnesses. Thanks for the work you do on behalf of our great country and the skill with which you do it. It's been an honor to see you all at work in your roles. And really just for the benefit of folks back home in Ohio who are concerned about affordable housing as well. It's not just on the coast where affordable housing is of concern. In rural communities, often we face shortages. Part of that's due to just population density, even though the cost of living is much more manageable in Ohio. But when you look at the size of the balance sheets that we have within Treasury, that we have within the various components, I'm just curious, what percentage of that balance sheet is comprised of things the market would produce? Market risk versus essentially subsidized programs that would never actually be produced in the market. Director Calabria.
Thank you. And let me really emphasize, as someone who grew up in rural America, the importance of making sure that credit is available there. I'll also note, I've been going around and seeing the Federal Home Loan Banks and recently visited Cincinnati Federal Home Loan Bank and want to make sure that I get outside of Washington. But more directly to the question, we are looking very closely, whether it's the conversation between the GSEs and FHA or between the private market. We don't want any gaps, but we do want to look at where can the private sector pick up this business and provide it so that no one is left out.
Thank you. I don't know if we'll have an easy quantitative answer, but that highlights the problem to me. To me, if you think about the composition of the balance sheet, we begin with underwriting. And some things just wouldn't pass an underwriting test. They really wouldn't. They only exist because there's a federal program that intentionally targets this. We decided as a country, collectively, to pass a law that said we're going to do these things. The market wouldn't produce these things. And my concern goes to how those things filter through the balance sheet and then wind up on the back end, perhaps in a credit risk transfer. So when I look at the efforts to de-lever the balance sheets and put that risk back out into the market, and I think back on the housing crisis, people in the financial sector have been demonized because they structured these mortgage-backed security products in a way that was full of bad product and not enough good product. And it seems to me that non-market-based risk shouldn't enter the market. It should be held on the federal government's balance sheet because the only reason it exists is because the federal government decided to create it. And as we look to de-lever that balance sheet, and we use the product called a credit risk transfer, for the benefit of folks at home, Director, could you please explain what a credit risk transfer is?
Certainly. So what the GSEs will often do is they will have a pool of loans, which they end up calling the reference pool, and they'll sell a credit risk into the marketplace. They have over 200 some investors in the marketplace, some of these insurance companies, other types of investors, and they will essentially take the credit loss. So if this reference pool doesn't perform, the credit loss is transferred to the investor. It does allow us to get some market signals. So, the bids that we see on credit risk transfer are an indication of what market participants think about the underlying risk of the reference pool. So I think we are learning a lot from that process and having a better insight on risk. And of course, within conservatorship, this was an important way to get some of the risk outside of the GSEs.
Thank you for that. And so when we look at selling that product, right now my concern is that this isn't really retained on the federal government's balance sheet. In fact, some might propose what to me would be an absolutely horrible idea, is to protect the taxpayer, to sell it off into the market, to keep the good stuff on the government's balance sheets, and effectively, keep the lean meat on the government's, sell the fat and fillers out into the market. And that's a recipe for disaster. This should never enter the market because the market would never actually produce it. They wouldn't even do the underwriting to let this happen in the first place. So as I look through the recommendations, Mr. Secretary, I just would ask that you consider the structure, the purpose that these entities even serve. Because even now, at 3.5% unemployment, with the economy booming, record low unemployment, wealth and prosperity on the rise at every income level in the United States of America, we are actually providing bigger housing subsidies, federal housing subsidies, than back right after the crisis when we had a shortage of affordable housing at a different level. We had 10% unemployment, and unfortunately the trend isn't for less federal housing subsidies, it's for more. And so we're continuing to load up these balance sheets with bad product. I just ask you protect the market by making sure that doesn't wind up in the credit risk transfer pool so that people in the financial sector can do sound on the front end and on the back end, and the government can contain the problem that they are, in fact, creating. Thank you.
Gentleman from California, Mr. Sherman, is recognized for 5 minutes.
We currently have a system that's the envy of the world. Ordinary working people able to borrow hundreds of thousands of dollars at pretty low rates. We have a system that has produced $300 billion of profit for the federal government, more than and has paid back the federal government $109 billion more than was necessary at the beginning of the crisis. It works. It produces huge profits. It produces low interest rates. It is a far better real estate finance system than any I'm aware of anywhere in the world. It has one giant flaw. There's no way to make $1 billion for a private individual. There's no way to get stock options for a private individual. It works for everybody except the 1/100th of top of 1%. This is working so well that you couldn't get Congress, not even Congress, which often makes stupid mistakes, to approve spinning these entities off. They are, in effect, government entities. Secretary Mnuchin, do you believe that you can spin these entities off without an act of Congress authorizing that?
Yes, we do, but let me just make a comment.
No, I've got a limited amount of time. You got your opening statement. This is my 5 minutes. I hope very much that you don't. It would be a terrible mistake and anything, but let's move on. You've said that we're not going to lower the conforming loan limits as part of your plan. I just want to, I've got somebody who worries about this. You wouldn't deny the federal government backstop to loans over a certain amount as long as that amount isn't the applicable conforming loan limit. In other words, you're not planning to back into a decline in the conforming loan limit by saying, well, certain loans under that limit will still conform, they just won't get a backstop. I shouldn't worry about that, should I?
That's not the case.
Good, thanks. Director Calabria, 1 out of 6 mortgages relies on the QM patch. The patch is set to expire very early in 2001. The tendency, particularly in my branch of government, is to deal with things like a day before the thing is going to explode, can I be confident that business will have plenty of advance notice if there's a change in the QM patch?
I will certainly endlessly nag CFPB to get it done in time.
And we just had them there, and I nagged them too, so I'm helping you out. Okay, we have a federal system. The decision as to whether to have rent control is a decision made by states, and in my state, delegated to cities. And I would hope that we wouldn't try to use the power that you gentlemen have to tell California and various cities what kind of rent control it should have. Especially when you're making a loan at the beginning, you know what the rents are when you make that loan. The loan has to be a good loan based on the rents that exist when you make the loan. So the opportunity to raise those rents higher may be very beneficial to a real estate investor, but are not necessary for you to determine that the rent will pay the mortgage. Secretary Mnuchin, is there going to be some effort to penalize multifamily apartment home purchasers if they happen to be in a city that allows certain types of rent control?
I think the answer is that rent control has worked for very long periods of time. And I think the real question is if there are substantial changes to rent controls that really, and this is the director's responsibility, that the GSEs have to properly underwrite the credit of those loans.
But it'll be an underwriting issue.
Correct.
Not a use of the power of the federal government to go with one system rather than the other. And as I pointed out, it shouldn't be a big underwriting concern because you're making the loan based on the rentals that exist when you make the loan. Nobody's making a loan and saying, well, this is a terrible, imprudent loan, but when you raise the rent some future day, it's going to...
I would just comment, there could be a credit issue. For example, if these are 30-year loans and people don't reinvest capital to keep the buildings correct, there could be credit issues.
I look forward to 30-year apartment loans, and I yield back.
The gentleman from North Carolina, Mr. Budd, is recognized for 5 minutes.
Thanks to each of you for being here. So this hearing was entitled by the majority as the end of affordable housing. So to each of you, is there anything in the administration's housing reform plan that would end affordable housing or that would call for the end of affordable housing, yes or no?
Absolutely not. In fact, our highest priority is to provide affordable housing.
I tried to clarify that in my opening statement, and I would give the chair and others the benefit of perhaps they didn't understand certain aspects of the plan. Director Calabria?
No. Okay, thank you. And again, a yes or no to each of you. Would the administration's plan lock Americans out of 30-year fixed-rate mortgages or result in the loss of investor confidence in our housing investments?
No.
No.
No. Thank you. So is the goal of affordable housing better advanced through the convoluted system we have of today's goals, quotas, and set-asides, or could it be better served through a new housing finance system with a more efficient, transparent, and accountable mechanism for delivering tailored support?
You think it'd be better served?
The latter.
I have yet to see a government program that couldn't be made better.
Thank you. So, Director Calabria, this question is for you. And for the record, I really appreciate your hard work on serving as the conservator of Fannie and Freddie and as a regulator of the federal home loan bank system. You've been exceedingly transparent on what your intended course will be on every step you intend to take. So again, thank you. So I understand you're in the middle of a comprehensive review of pilots and special programs at Fannie and Freddie. And again, I value this work because in a couple of areas I worry that the GSEs are operating in ways that compete directly with the primary mortgage market. So take, for example, Freddie Mac's mortgage insurance pilot called Imagine and Fannie Mae's mortgage insurance pilot called EventID. Should entities in conservatorship be operating pilot programs that directly compete with the private sector? And if not, would you explain to this committee why you're opposed?
First, let me say as a top-line issue, both in and outside of conservatorship, I fully expect the GSEs to live within their charters. And we will take a very direct, if it's not on the page, they're not doing it. That's the way the law is. Within conservatorship, the focus on any sort of pilots or efforts, in my opinion, is to be about focused on getting out of conservatorship. And that has to be the primary focus of strengthening these companies and getting us ready for potential downturn in the housing market.
So could you elaborate on that a little more? I mean, what ways do you see them as competing against the market? I want to drive that point home, and if you could help me with that.
We will be reviewing all existing pilots to make sure that they are consistent with exit of conservatorship.
So the main priority, if you would say it again, it would be to get out of conservatorship.
Absolutely.
Thank you. So again, continue with you, Director Calabria. What are the impacts on taxpayers and home buyers of FHA's expanded market share since the financial crisis, and how has FHA's attempt to grow its way out of fiscal problems actually displaced private capital and expanded taxpayer risk?
So this is a question on FHA? Am I making sure I'm getting clarified?
It was for FHA.
Okay. We certainly want to make sure that FHA and the GSEs are competing in a way that's not counterproductive. I think it's important to keep in mind, I would call what the GSEs historically have done is a little skimming of the cream, if you will, off of FHA, taking the better risk away from FHA. That forces FHA to have to raise premiums and potentially threatens the viability of FHA. So I do think there's a way that I can make sure that my friend across the street is not being undermined by what Fannie and Freddie are doing.
Thank you. So, final question, in your view, what sort of countercyclical role should FHA play in the market?
I think it's important to keep in mind that FHA, Fannie and Freddie, and the Federal Home Loan Banks were actually all created to be countercyclical. They really should be the support there in times of stress. They should be there to put a floor under the market. My view is they should not be leading the charge of lemmings over the cliff. They should be there to be the net to catch the market when it goes south.
Thank you, and thank you to each of you. And with that, Chair, I yield back.
Thank you. The gentlewoman from Pennsylvania, Mrs. Dean, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you for holding this important hearing on the question again of the lack of affordable housing, the need for more affordable housing, and the reforms that the administration seeks. I thank the secretaries and the director for being here. And this is something very important in my district, suburban Philadelphia, the lack of affordable housing across the spectrum of folks who need affordable housing. So maybe, I know I'm at the end of the line here, but I like to go back and just define the scope of the problem. I'll start with you, Director Calabria. Your second line in your testimony I read with interest. Too many Americans lack what each of us deserves, an affordable place to call home, whether it is rented or owned. Could you help us understand the scope of the problem, the specifics, whether it's rental, home purchases, seniors, rural areas, underserved? Give us the scope of the problem.
It's really across the board. I mean, we've seen, for instance, in California, the increase in homelessness, and of course that's happened in many other cities as well. We've seen an inability to afford rents. This, to me, it has broader economic problems as well. Your ability to move somewhere, your ability to move to New York or Los Angeles to be able to advance in your career, that's threatened if you can't find a house to live. Of course, I'm sure you could talk to any of your junior staff or interns, their difficulty in finding affordable housing when they come to Washington. So it impacts your career, it impacts the stability in your life. It's difficult to keep a job if you don't have stable. So to me, this is a real crisis that's all-encompassing.
It's a core crisis. By the numbers, some of the data that we have seen here, that only 1 in 4 people eligible for rental assistance or low-income housing assistance actually receives it. Does that match your data?
Correct.
How do we expand and reach out to the other 3/4 of the folks who are suffering under this problem specifically? How do we do it?
So to me, I think that there are 3 fundamental constraints going on here, but at the risk of alliteration, my 3 L's: land, labor, and loans. I think we do need broad-based reform in zoning and entitlement processes in many areas in the country to try to speed that up. Second, on labor, we have a distinct shortage, especially of specialty trade contractors. Don't have enough plumbers in this country, don't have enough electricians, don't have enough carpenters. Throw the money at one at it. If you don't have somebody there to swing that hammer, it's not going to get built. And we need to focus on that. And of course, my responsibility is on the lending side, on the loan side, and I think that's an important piece of the puzzle. But I would really emphasize, we need to fix all 3 of these.
I appreciate that. Is it your ambition to make sure that we do reach out and get the whole host of folks who need affordable housing?
Absolutely.
Mr. Secretary Mnuchin, is that your ambition also, that we would use government wisely and in a limited way to make sure that we are reaching all of those who need homeownership assistance?
Yes, I would, and I think, again, there appears to be bipartisan support on the need for better affordable housing.
But nowhere in your testimony did I hear you or Secretary Carson talk about the gap, the 3/4 of people of absence of units and housing. I heard all of I read with interest your issues about reform, making sure we're more efficient. Mr. Secretary, you said you're recommending more efficient means of delivering that support. How about more abundant means of delivering that support? Are you interested in doing that?
I personally think that that's a good goal, and we would work with Congress to do that. That would need, again, that's part of the reason why our preference is to do congressional legislation and to sit down on a bipartisan basis to agree on these things and how to do it.
Secretary Carson, is it your ambition that we expand our resources to make sure we get everybody affordable housing?
Absolutely. It's one of our highest priorities, and that's why, this past spring we had the display on the National Mall. It's not a lack of innovation. It's not a lack of entrepreneurship. It's a lack or an abundance of barriers that prevent us from being able to use it, and we need to use all of our resources and work together to remove those, because, we're smart people and we can do it.
My concern is, however, that it seems to me that a lot of this is, the reforms are really an attempt to privatize, to say this is not government's responsibility. Back to the director, is it your ambition, you said twice, and I heard you clearly, in their current condition, Fannie Mae and Freddie Mac will fail in a downturn. It's your ambition to shore them up?
That's my ambition for that not to happen.
Is it your ambition to shore them up or spin them off, Mr. Secretary?
Well, again, it's both. We would never spin them off without shoring them up. So
shore them up and get rid of them?
Shore them up and
privatize.
Well, again, they are private, but keep them privatized. Yes, get
Fully
them out of
privatized.
conservatorship and out of receivership.
In the face of 3 out of 4 people who need efficient, affordable housing. That's your ambition. That's the trajectory you're hoping to take Treasury.
Well, again, I think there's two different issues. Affordable housing is part of this issue, but is a broader government issue.
I thank you, Madam Chairman.
The gentleman from Tennessee, Mr. Kustoff, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you for convening today's hearing, and thank you to the witnesses for appearing also. Director Calabria, if I could, I think that Secretary Carson earlier today was asked about manufactured housing, which is also important in my district of Memphis and West Tennessee. In the Housing and Economic Recovery Act of 2008, there's a duty to serve provision that singled out the availability of credit for manufactured housing as an underserved area that Fannie Mae and Freddie Mac are required by statute to make a concerted effort to address. As it relates to the duty to serve provision, the administration's housing finance plan proposes to replace that duty to serve with a more efficient, transparent, and accountable mechanism, and to transfer some of these activities to HUD. If you could you explain how this would work in respect to manufactured housing with both real personal property, chattel loans, et cetera?
Well, and let me emphasize, and I'll note, several years ago I ran the manufactured housing program at HUD. Very familiar with it, and I do think for much of America, manufactured housing is the most affordable option, and I think we can make a lot of advances to bring down the cost of housing via manufactured housing, so committed to that. I can't speak to the details of what Treasury has envisioned. I'll leave that to Secretary Mnuchin to discuss, but I do think that we can continue to make sure that Fannie and Freddie have an active involvement in manufactured housing and doing it in a way that is safe and sound.
So in other words, the GSE statutory duty would not be diminished.
It's in law today, and I have every intent, as long as it remains in law, we will actively carry it out.
Thank you very much, Director. Secretary Carson, it's good to see you again.
Absolutely, you too.
I had the honor to have you in Memphis just a few weeks ago as it relates to opportunity zones. And in Memphis, We have 32 opportunity zones, of course, which were created under the Tax Cuts and Jobs Act. The area that you visited in Memphis was a development called Union Row, which is a $950 million project that's going to include apartments, hotel, retail, grocery store. In remarks that you made at that event, you mentioned the importance of local community involvement and also added benefits such as rising property values. Can I ask you, how do you see opportunity zones as a way of addressing affordable housing in Memphis? And of course, I know affordable housing, you also made an affordable housing stop in Memphis before you went to that Union Row project.
Yes. Well, in a lot of the opportunity zones across the country, you know, the initial starting point might be, for instance, like in St. Louis, an abandoned foundry. And then as they begin to build out, they have to build workforce housing. And a lot of the workforce housing, of course, is going to be affordable housing. And we have tailored some of our programs to be able to take advantage or allow builders to take advantage of some of our grant programs. So instead of just, for instance, a single multifamily unit, we used mixed purpose units so that they can put commercial units on the first floor. Those are the kinds of things that obviously not only provide housing, but also provide jobs. And of course, they tend to fertilize the area so that other people want to come in and take advantage.
Thank you, Secretary Carson. Secretary Mnuchin, one thing that I did not mention, that the opportunity zone in Memphis that was created, that I just described, Union Row, is an area with some degree of blight. Of course, in your role as Secretary of the Treasury, you're responsible for certifying these opportunity zones. Can you describe, if you can, the impacts on the blighted communities that we're seeing across the country and how opportunity zones are addressing those?
Well, first of all, the opportunity zones were, the states had the ability to designate opportunity zones, and if they fit certain requirements, we certified them. We think that the states are better to determine where these are appropriate. But yes, I think for the areas that you've described, they've been very beneficial. And I think not just for housing, which is a big part of this, but also for new businesses and businesses being relocated.
Thank you. I thank the witnesses, and I yield back.
The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes.
Thank you very much, Madam Chair. Thank the panelists for being here today. Inadequate affordable housing is a major issue that people in Chicago face, especially the working class families that I represent on the southwest and northwest sides of the city. Rents in America have steadily increased while working class people have seen their wages remain stagnant. Rents in the U.S. have gone up by 13%, while the median household income for renters went up 0.5%. The home ownership market isn't any better, particularly for communities of color who were hit hardest by the housing crash and had the most foreclosures and devastation to recover them. That's why the role of GSEs and FHA are so critical in helping communities regain wealth and home ownership. So I think we're on the same page, but for the record, if you could answer a yes or no, the three of you, you all support promoting affordable housing, correct?
Yes.
Yes.
And you believe that government plays a role in achieving housing affordability? Take it across the board. Thank you. In a recent report, the administration, from the administration, the FHA noted that its plan seeks to, quote, ensure the FHA and taxpayers are properly compensated for riskier loans. And this is something that was raised earlier by Representative Wexton. Part of that plan issues introducing tier-based pricing and FHA guaranteed loans. I'd like to ask Secretary Mnuchin if he would also share the information that I think you committed to Representative Wexton with me, because we're interested in that also. But Secretary Carson, tier-based pricing would constitute a change from FHA's current policy, which currently maintains that a flat fee without respect to the credit rating of the applicant, correct?
Yes.
Thank you. But that's disappointing to me. That seems to run counter to the model that that has governed FHA for decades. The cross-subsidization of loan applicants with stronger credit with these without creates a risk pool that enables FHA to provide loan guarantees regardless of credit. So what you're proposing, tier-based pricing, is basically risk-based pricing, undermining the entire model that allows FHA to back loans for lower-income families with less credit.
Risk-based obviously means you take the people who are higher-risk individuals and you charge them a bit more. The people who are low risk and have developed a very good credit line will have a smaller premium.
So those who have struggled financially, economically, are going to be charged more.
Well, it depends on
if their credit is reflective of that experience.
Depends on how you determine the credit and the credit risk.
Let me switch gears. Secretary Mnuchin, the Treasury recently recommended that Fha should revisit the GSE's underwriting criteria for multifamily loans in jurisdictions that adopt rent control laws or other impediments to housing development. Secretary Carson, your agency noted that rent control laws interfere with local housing markets. Both of you are suggesting that some type of penalization for areas that enact rent control laws. Is that what the takeaway? And what other impediments might you be referring to?
Well, I may have commented on this earlier. First of all, I think rent control has worked in many markets for long periods of time. I think the comment was, in certain markets, there's some very, very drastic changes to the rent control laws, and they may have credit implications for underwriting. So that was the purpose of that.
And there are multiple impediments, not just the rent control. You know, there are wetlands, historical lands, there's height restrictions, there's density restrictions, there are zoning restrictions. I mean, by the time you add all of those up, it becomes extremely substantial. And that's what is increasing the price so much, and particularly when you look at renters. You know, between 2001 and 2017, the number of families who are significantly burdened in terms of renting has gone up by 45%.
Generally speaking, you can say that, but also local officials tend to know their communities best. Thank you very much. I yield back, Madam Chair.
Thank you. I'd like to announce the votes have been called. I intend to recognize the following members, and then we will adjourn the hearing. Mr. Gonzalez, Ms. Ocasio-Cortez, and Mr. Rose. The gentleman from Ohio, Mr. Gonzalez, is recognized for 5 minutes.
Thank you, Madam Chairwoman. I certainly appreciate you making a few extra minutes and for holding this hearing. I'm under no illusion about the difficult challenges that you all face in attempting to successfully reform our housing finance system and GSEs, all the while not disrupting the housing market. One thing is clear, though, Congress has an obligation to work with the administration and forge a bipartisan path to responsibly address the challenges being discussed today. My first question, Director Calabria, you've testified about the current leverage ratio being around 500 to 1, while big banks are now levered around 10 to 1. In your view, what is the proper target for the enterprises to be leveraged?
A lot less, but I think ultimately the GSEs represent the same sort of risk to the financial system as other SIFIs, and I think they should be in that ballpark.
Thank you. And then one of the things that we've talked about before and that I've frankly read is there's a concern that this plan could be seen as a bailout for the preferred equity holders. And I guess my question would be, what is the functional difference between holding the reserves, let's say in a dedicated account at the Fed, versus where we can watch them, we know exactly where the cash is, what it's doing and what it's not doing, versus having it on the balance sheet?
Well, first of all, let me really emphasize that until they are out of conservatorship, dividends aren't being paid. These aren't payouts to shareholders as we retain earnings. So I want to be very clear about that. We're building a buffer to protect these entities in times of loss. As Secretary Mnuchin has said, We haven't gotten to the point of deciding what the next route is. Again, that could be an option.
Okay, but do you say, so I guess, again, what is the functional difference? What is the difference in your mind between having a dedicated account at the Fed versus at the GSE, Secretary?
I just want to clarify again. Although the Treasury is not being paid cash, the amount that we are deferring in cash that will stay in, our liquidated preference will go up. So there is no difference from my standpoint between having cash in the bank and having an obligation that's owed to us.
Gotcha. And then, Director Calabria, you've talked a lot about, and I think this is 100% right, at the current leverage ratio, there's no way these banks could sustain any sort of meaningful downturn. Could you put some clarity around that specifically? Like how big of a downturn, what sort of stress tests are you running, and
Sure.
Where should we be concerned?
Well, I think that they're a bit of an underestimate. Our most recent Dodd-Frank DFAST stress test that were performed for Fannie and Freddie showed that if you had a downturn similar to the last one, you would have to put into excess of $40 billion. And again, I don't see how you get that money back. So these are not small numbers we're talking about.
Yeah, thank you for that. And then Secretary Mnuchin, when talking with local stakeholders, they've expressed support for responsibly ending conservatorship and efforts to capitalize GSEs. However, they have expressed some concern about limiting Fannie and Freddie's ability to offer cash-out refis, second homes, investment properties, and reviewing overlap between the GSEs and FHA, specifically low down payment, high debt to income, and high loan-to-value loans. Preventing the GSEs from offering these products could limit consumer choice, and specifically in regard to FHA overlap, will shrink liquidity at the bottom of the market. Can you talk about why you recommend these changes and how you view these proposals would benefit the consumer, the taxpayer, and the overall economy?
Well, again, we're suggesting these be looked at. So just as an example, to take cash-out refis, we're not saying to eliminate cash-out refis, but obviously when borrowers take cash out, it creates a riskier loan. It used to be this was one of the great savings mechanisms. So we want to make sure that as the FHFA sets credit, that they look at a cash-out refi differently than they look at a purchase money mortgage.
Fantastic. Thank you, and I yield back.
The gentlewoman from New York, Ms. Ocasio-Cortez, is recognized for 5 minutes.
Thank you, Madam Chair, and thank you to our witnesses for coming today. Secretary Carson, it's good to see you again. Secretary Mnuchin, releasing Fannie and Freddie from conservatorship is one of your top priorities, correct?
I would say housing reform is one of my top priorities. And again, we have not predetermined whether they go through conservatorship or receivership.
Okay, I see here from a Washington Post article, Fannie Mae, Freddie Mac should be privatized, Secretary of the Treasury nominee says. And it says here that you stated privatizing Fannie Mae and Freddie Mac is, quote, right up there on the top 10 list of things we're going to get done. Do you recall that?
I do, that's accurate. So again, I was just referring to, we do believe they belong in the private sector. That could be through conservatorship or through, as I said, other resolution mechanisms.
I see, I understand. Are you aware that the same day you made those comments, Fannie Mae's share price increased by 46% and Freddie Mac's share prices jumped 43%?
I wasn't. I think it was clear the market didn't understand my comments and what they implied. Many times there's very little liquidity and markets are not efficient.
I see. Just to clarify for the record and for the confidence of the American people, Mr. Mnuchin, have you, your spouse, or any beneficiary of your assets, including your 15 disclosed trusts, would they stand to receive any financial gain from your plan surrounding the exit of Fannie Mae and Freddie Mac from conservatorship?
Today, no. I have divested all my assets, and other than no, I've divested all my assets. I have no reason to believe I have anything to gain.
Mm-hmm. Was there any gain from the increase in that share price in following those remarks?
Not aware of it.
Okay. Director Calabria, you have also made clear your intentions to release Fannie Mae and Freddie Mac from conservatorship with or without congressional action to provide an explicit government guarantee. And you have already taken steps in that direction by allowing the GSEs to build capital. There are serious concerns that if you proceed with this plan without Congress, there would be a serious loss of investor confidence, which could result in an unforeseeable disruption to the housing market. Have you heard from any of those concerns from domestic or global investors?
Thank you for that question, Congresswoman. Let me clarify. This is less my intent than my obligation. I am following the law. The law requires me either to fix them and get them out or put them in receivership. We've certainly heard from a select number of Wall Street firms that would like us not to do that. To be very clear, if the choice is on one hand, I follow the law or I don't follow the law because Wall Street doesn't like it, I'm going to follow the law.
Going back to concerns about disruption of the housing market, what are some of those disruptions that have been raised?
I think a number of investors, particularly in the asset side of the management market, don't want to see changes in interest rates because that would undermine their holdings. I think they would like an explicit guarantee. I guess I should say my long years of dealing with Wall Street, I haven't met anybody on Wall Street who doesn't want to take the upside and leave the taxpayer with the downside. That's my consistent experience in my working in these areas. So I think Wall Street's about taking the upside and the downside.
With the information you provide in your testimony, I'd like to discuss a matter of rent with you. In the 14th District of New York, an average renter earns about $20 an hour. But they don't earn enough to afford a one-bedroom apartment at fair market rent. Families are looking for stability as household incomes can't keep up with the rising costs of rent. First and foremost, I want to ask, for someone making about $45,000, what do you think is fair rent for them to pay?
Well, if we use the HUD standards where it's 30% of your income, that's one standard. Of course, there are fair market rents that are set at 40%. Again, these are HUD standards. We can argue whether those are too much or too little. I would fully agree with the overall premise of we have a lack of affordable rental housing, not only in New York, but many areas of America. I will note when we recently changed the multifamily caps, we increased the percent of affordable.
I'm sorry, I just need to grab a number because I'm running out of time.
You want a number, what I think somebody's rent should be? I think that ultimately should be between them and their
Making about
landlord.
$45,000 a year.
I think that it should
Ballpark?
ultimately, I don't think I should be
Do you
deciding.
know
what
anyone
someone
that
should be.
makes $45K and what their rent is?
That's a little more higher income than somebody paying 45 income in rent. Are you saying 45 income or 45?
No, if someone making $45,000 a year, what's a ballpark?
Let's say if you were a friend of mine and you were making 45, well, would I suggest you personally, not as a government official, I would be happy to say that you probably shouldn't spend more than 15 grand tops on your rent.
Thank you very much.
Mr. Rose, you're recognized for 5 minutes.
Thank you, Chairwoman Waters, and thank you for calling this hearing. Before I begin today, I want to reiterate my colleague, Mr. Lukemeier's call for FSOC to ask for a study on CECL. I do believe that would be important. I agree with many of my colleagues today that housing finance reform is both welcome and long overdue. As has been said many times today, the time to reform our housing finance system is when times are good, not when our system is in a time of crisis. One thing I have noticed in my brief 10 months here in Congress is that too often we let the perfect be the enemy of the good. The proposals put forth by HUD and Treasury represent a positive first step on the long path towards reforming our housing finance system. There are 116 itemized reform recommendations between the two reports. Promoting competition, eliminating redundancies between the GSEs and FHA, and protecting taxpayers from future bailouts is good policy. It is responsible governance. The relatively stable housing market we have right now will not last forever. I think we all agree it never does. It stands to reason that members of this committee will not agree on every single recommendation, but we cannot afford to let the perfect be the enemy of the good. I hope we can put partisanship aside so we can make our housing finance system more resilient before we reach another crisis. One issue I was pleased to see addressed in HUD's housing finance reform plan was that of manufactured housing. Manufactured housing is incredibly important to the 6th District of Tennessee, which I am proud to represent. According to the Manufactured Housing Institute in the United States, manufactured homes account for 7.1% of occupied housing units. In Tennessee, they account for 10.5%. In my district, 13%. Dr. Carson, I appreciate your continued attention to the HUD programs that serve manufactured housing and comments you have made in prior testimony about the need to make adjustments to the Title I and Title II programs to better serve manufactured housing. I am concerned that the volume of manufactured home loans being supported by FHA continues to decline, however. Among the administration reforms mentioned in HUD's report is the need to publish updated Title I standards that address regulatory burdens of participating in the program. Dr. Carson, what updates would improve the Title I program, and what can be done either legislatively or administratively to expedite these updates?
Well, we've greatly expanded the Manufactured Housing Office to look at all the issues that would facilitate not only the construction, but the safety measures associated with them, combining some of the updates to accelerate the process. And we will continue to do that, fully recognizing that this is one of the major players when it comes to reducing the cost of housing, not only in the rural areas, but throughout the nation. That, coupled with looking at modular housing and other newer techniques, we've impaneled a group of people to look at all the newer techniques and assess those. And manufacturing housing is a huge portion of that.
Thank you, Dr. Carson. Dr. Calabria, or Director Calabria, can you give me an update on the chattel loan pilot programs that the GSEs included in their DTS plans?
Thank you. We're currently reviewing that. The GSEs have requested modifications to their current duty to serve plans, and so we're going to put those out, have some listening sessions, get some comment back, but we're currently under review for that.
What is being done to ensure that the pilot programs discourage cherry-picking the best loans so that the pilots are not significantly disruptive to the other market players?
Thank you for that. I think it's an incredibly important question. My objective over time is that either pilots prove themselves to be successful and then they grow. I think it's problematic if you have long-running pilots where select industry players have access that others do not have. So I think these should be open to all if they work. If they don't work, then we intend to end them. So again, I would agree that I think where we need to go is to figure out how this is a program that everybody else can participate in on a level playing field, if it makes sense.
Finally, Dr. Calabria, there is one final concern I would like to raise with you, and it is one that I hear of often back home. You and I have discussed the issue before, and that is to rein in excessive compensation packages, especially at the GSEs, and especially while they're still in conservatorship. Could you say a word about that?
We recently, I guess a couple months ago, made some changes to compensation practices at GSEs to better align them to being in conservatorship.
Thank you. I yield back.
Thank you. I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned. Thank you very much.